Hello everyone. So in future, those jobless, uh, very busy losers uh, who don't have time to attend a live session, so they can ask question during this training program whenever they decide to join in a particular live training session. So they can ask question on the training session. They will miss the live sessions. They can ask questions about the topics during 10 minutes when a Zoom invite is shared. I will open the Zoom chat for you to ask question. Uh, and you can also ask question during the 10 minutes break as well. I'll open the chat for you to ask question. Uh, Zoom chat every session that we're going to have a break. So this is me sarcastically saying that this is a live training program. I'm not selling a course. Courses are recorded videos. I'm not a course seller selling scam. I like to do live trainings. So if you want to make this a course, only relying on the recording, that's perfectly fine as well because when you fail your exam or when you are unable to get a job, you know, you're going to be suffering on your own. No one's going to help you. No one's going to help you here. No one's going to help you in your friend circle, anywhere. So today's session is about risk mitigation. So let's start with a simple concept of crime or of an offense. An activity as per law that is illegal in your country, unlawful activity. That's called offense. There are two types. One is a financial crime, other one is called passionate crime. So when you commit a financial crime, this is where you do illegal activity and you earn illegal funds. This one is when you do illegal activity but you do not earn any money. The difference between a hitman and a serial killer. Hitman kill people to earn money. Serial killer kill people for the love of the game. He loved the game of killing people. Yeah. So passionate crime is not part of your certification. So financial crime is. Okay. So when you commit a financial crime to earn illicit, it's also called illicit fund. Illegal funds are also called illicit funds. So when you earn illicit funds, the more you want to keep receive the money or and keep the money is out of these three. These out of these four. So first is you most probably want to earn the money in cash. If someone is going to pay you money to kill someone, you want to be paid in cash. You want to be paid in crypto, privacy coins, hardware wallets, private blockchain. Third is you want to be paid maybe in kind, something like you being want to pay in diamonds or some rare gems, stones, expensive paintings, artifacts. So being paid in this one of these three modes, you can to some extent keep yourself anonymous. Crypto is these days pseudonymous, which means it's not fully anonymous. But if you're smart enough, you can easily exploit any of those three to keep yourself to some extent anonymous, which makes law enforcement agencies' job a bit difficult to investigate you, to find money trail, to gather evidence against you. But if you are, let's suppose, a retarded person, you have some mental issues, you said that I, I'll kill people for money, and you gave your banking account or you give your, banking account in a conventional bank, or you give your digital banking account in a fintech company like PayPal, Cash App, Venmo. So you are very stupid if you are doing this sort of activity, because this makes law enforcement agencies' job very easy. Uh, so they will find out, bank compliance department can find out, fintech companies compliance department can find out, but the real one who do the real job, which is law enforcement agency, they'll investigate you, they'll gather evidence against you, which will they share with the prosecutor, and the prosecutor will prosecute you so easily. It will be very difficult for you to, manipulate anyone. It will be very difficult for you to find any justification to convince that the money that you earned was from, legal source. So in money laundering, we look for justification, fake economic justification. So when a money moves hands, it moves hands between a personal account, your examiner calls it individual, to an individual, or individual to a corporate account, which is called entity, entity to individual, entity to entity, corporate account to corporate account. So this is, to and fro. So when a money moves hands uh, through banking channel, so your bank wants economic justification for the funds being moved. So economic justification means that you give someone the money. Generally speaking, you give someone the money to pay for some product and services. Generally speaking, so this is a economic transaction that you're doing. This economic transaction, we are assuming that is based on, it's a arm's length transaction. Arm's length transaction means that where the buyer and seller are different parties. The money they're paying for product and services, um, actually, the price for it was set by, demand and supply. So okay, so in a arm's length transaction, the price is set for product and services, um, based on the demand and supply. Opposite to arm's length transaction is called related party transaction. Um, in a related party transaction, the price that is being paid, the purpose, the relationship is totally different. Maybe the buyers and seller are related to each other. One is a parent company, other is a subsidiary. So, or two companies have similar beneficial owners and so on. So, money launderers try to create fake economic justification to convince the bank that the purpose of the transaction, which is fake economic justification of business reason, and the relationship between the two, the sender and the receiver, have economic justification. When money moves hands, money moving hand domestically in a domestic fund transfer, and also in a cross-border transaction as well. So when you're trying to manipulate your bank into doing these things, your goal is to, have the fund, have the bank approve those transactions, bank unable to report you, unable to find it suspicious. So when you're doing it in one of those three ways, it's it's a bit difficult for you to manipulate the bank, for the bank to find your transaction justifiable. But if you do this through corporate entity, it's much easier. If you ask your Jew lawyer to help you to do this, they will ask that we're going to create multiple corporate entities, multiple shell companies, multiple straw buyers in multiple jurisdictions to move money. So a Jew lawyer will guide you that when we create multiple corporate entities and the corporate accounts in different jurisdictions in different banks, we will be able to manipulate the bank. And the manipulation is that where the bank finds the purpose, the relationship between the sender and the receiver, the price that is being paid for the product and service, the price is being paid, all is justifiable, makes economic reason. You, of course, are trying to create a fake economic justification. They find it genuine economic justification. It means that you have been successfully able to manipulate your bank. So the manipulation is in this situation is where you want to create lots of noise for your legal transactions, and you want to remain silent for your illegal, transactions. So another way of understanding this, that why this happens, is to discuss a low trust society societies of blacks and browns, black and brown people, they and their third world countries that they live in. All of their countries are third world. Exception in black countries are South Africa. Exception in brown countries is your UAE. Rest of them are, So blacks and browns, they think that they are winning in life, in their lives. They are winning in when they are able to scam their own people and become a not a millionaire, they become a billionaire. So they scam their own people through tax evasion, not paying tax to government. Or if they own the government, they will have the loans that they have taken from the government owned banks. They have the loans written off. So it means that the poor people of their countries are making the rich people become more rich. So rich people are exploiting the poor people, So it means that they are scamming their own people to become a third world billionaires. So when they scam their own people, their second goal in life is to move the money because they have earned the money by scamming their own people in a third world currency, which is weak currency. So all of those black and brown people, when they have $2 in their banking account, they want to move to the white people country. So the next goal in their life when they become a billion in their third world country is to move money by converting money from weak currency to strong currency, which is white people currency, dollars, American dollars, Canadian dollars, Australian dollar, British pound, European euros. So they want to move, to white people country. So they find economic reason to move those money. So economic justification to find move money from their weak uh, banking industry in a weak currency to move to the strong country in a strong currencies. So they make fake economic justifications. They create shell companies and so on. So this is one of the way. And third is they think that they're born in life is when they've got the passport of the white people country, when they have moved their own uh, the whole family into the white people country, and they've gotten the white people passport. So they when they moved out from their shithole country, the black and brown people country, and they found the white people country to be the best country. So they're born in life this way. So our goal is, if you are in a third world country and you're working in a compliance department of your effed up country's banks, so your goal is to find those billionaires who are abusing you, manipulating your bank when they've created multiple corporate entities to do, um, to earn illegal funds when they're committing financial crimes. And when you also see that the billionaires are moving their money to the white people country where they're creating economic justification, you need to find those situations as well. So this is laundering money through cash deposits and cash withdrawals or structuring. This is a very low IQ way of money laundering. No one does money laundering this way. Tax evasion, doing this way in a personal accounts. That's very stupid way of laundering money. You're gonna get caught very easily. You will be reported very easy quickly as well. So it's the corporate vehicles, special purpose vehicles that are being used um, on the instructions, on the guidance of the Jew lawyers that help you to, successfully launder money. So if you, because Jews own the everything. Also, they own the financial industry. So in order to beat the Jew in their own game, you need to hire a Jew lawyer to help you to do that. And Jew lawyer will say that the best way to launder money is not to open any corporate personal accounts because you're going to get caught. Jew lawyers will ask you that we're not going to be doing any placement, cash deposits, cash withdrawal. That's a stupid way. We're going to do through corporate vehicles. Okay. So let's suppose your name is Don John and you live in USA. You have committed multiple steps crime. I'm gonna give you example of 4 steps, but there can be a zillion different steps of crimes. So Don John first step was to smuggle drugs, illegal drugs, scheduled substance from Mexico to USA. These days, the fentanyls are not coming from Mexico; they're coming from Canada. But let's say Mexico in this example. And then it's a past tense smuggled. Yeah. So the next is he sold those drugs, which earns him drugs proceeds. So he have lots of cash. Drugs proceeds of fancy you're saying he sold those drugs to the crackheads in cash. And he hid those drugs proceeds somewhere. So he hid lots of cash. These days, we are in present tense. These days he's trying to launder money. So that's a crime, you know, smuggling drugs. That's also a crime. And the fourth one is also a crime. So there are certain crimes that you commit which can may injure or kill a human being. That's a capital punishment, something extreme that you can do. So extreme is, you kill a human being or you kill a dog. So something that very extreme. You can do this here because you're smuggling drugs. Some law enforcement agencies like DEA, drug enforcement agencies, try to arrest you, find you, or your tunnels that you created borders between Mexico and USA. So, we see this in Hollywood movies. It's also reality as well. And when you're selling drugs in other countries' territory, other gangsters' territories, they may try to, harm you. You may try to harm them. This can also happen here when someone try to steal your cash, but you're not killing or injuring a human being when you're laundering money. This is a white collar crime. Generally speaking, 99% of the time, you're not going to end up killing or injuring someone in money launderings. So it started here, but normally when you commit step 1 to step 3, you get a long-term imprisonment. Lifetime imprisonment, if not lifetime, let's say 20 years, 25 years of imprisonment for killing someone. Or if you're living in some jihadi uh, third world country like Saudi Arabia, they will, hang you till death, or they cut your hand or whatever. So let's say that you are hopefully born in a white people country and they just send you to long-term imprisonment. In a money laundering situation, when you're caught, the punishment is less severe. You get few months, few years of punishment, and you are out of prison. But all of these are connected. This is the whole crime. It started somewhere, and we are currently in step number 4. So in step number 1 to 3 is where he performed financial crime, which is he performed illegal activity, which earned him uh, illegal funds. We call those predicate offense. An offense that you do which lead to you laundering money. So financial crime is a primary offense or a predicate offense that you do which leads you to launder money. So laundering money is a secondary offense, something that you do in a second stage. First you get lots of money and then, launder that money. Laundering money to one country to another country, laundering money into financial system in your own home country. So whatever, the situation is. Secondary offense. So if you are caught right here, you know, uh, especially if you're born in a third world country of black and brown people. If you are caught here, you can easily bribe the prosecutor means a public lawyer, and ask the lawyer that please prosecute me, please do all the legal um, legal legal consequences that I have to face against me for the step 4 crime. Do not try to find out how I earn money. Only punish me, prosecute me in a court of law through judge or jury for step 4 issue, step 4 that I have done. So if you're prosecuted for step number 4 only, you're gonna get easy punishment and you will be out in a few months. So, but in a white people country, if you're caught laundering money, they have common sense that it's a secondary offense, so they will try to find out that how you actually earn illegal money that you are these days trying to launder. So when someone is caught laundering money, common sense says that money laundering is a part of a whole crime. And in this example, this part of a whole crime is step number 4. So we should not, when we catch someone laundering money, we should not just punish them for money laundering offense. We should always punish them for the whole offense, so they do not get the easy punishment. They should get a very severe punishment for the whole crime. So for the Don John, that would be when he's caught laundering money, that would be secondary offense, and he should be punished for the both primary and secondary offense. But his for his Jew lawyer, that would be the primary offense. When you pay for a Jew lawyer and you still get caught laundering money for the lawyer, that's the primary offense. But for Don John, that's a secondary offense. And of course, if the lawyer is going to help you unsuccessfully, lawyer is equally responsible for consequences, legal consequences. So then the next question is why someone would want to launder money. Don John have a $75 million cash, lots of cash, Breaking Bad level cash, room full of cash. So he thinks he deserve better things in life because he woke up today. Uh, Today was his, let's suppose, birthday. He's a 70-year-old person. So Don John thinks that he deserve better than his fat wife and fat kids that he have. So he made a bucket list. He said that he's getting old, lots of money. He made a bucket list. So on the top of his bucket list is get a Russian girlfriend. So Russian girlfriends are the very much in demand. Like Bill Gates lost his marriage, lost billions of dollars for Russian girlfriends. Short time Russian girlfriends. So if the Bill Gates can lose money, who's the billionaire, any Tom, Dick, and Harry can lose money and their life and their marriage because of the Russian girlfriend, East European girlfriends, which can be Ukrainian and whatever, Balkan girlfriends. So he wants a Russian girlfriend, and they're gonna cost lots of money. They're gonna come from Moscow. Um, they're not gonna live in your small house that you're living with your fat wife. The Russian girlfriend is not gonna drive a Honda Civic car that you have been driving with your fat wife and fat kids. She wants expensive things if she comes from Moscow. So she wants a big house. She wants sports cars. She wants Bitcoin. She wants expensive jewelry. She wants expensive paintings and so on. So financial action task force, we're going to discuss them in future. So they have asked all the member countries, which almost every country is a member other than Russia, and some non-CCD countries, non compliance countries and territories like Iran and North Korea. So other than these countries, every country is a member and have been evaluated as per the fourth round rating. The Financial Action Task Force has asked federal governments of those member countries to make sure that no one is buying anything in cash that costs $10,000 or more. And there is a regulation that also came out in Europe. They say that anything that costs $10,000 or more, 10,000 euros or more in Europe, no one will be able to buy from starting from January 2027. So member countries to not let anyone buy anything that costs in cash. So he have cash and he thinks he deserve to have himself a Russian girlfriend. How the hell is he gonna afford to have Russian girlfriend when she wants expensive things, designer jewelries and so on, and he only willing to pay through cash that he earned by selling drugs. So he have to launder money for that. He have been thinking with his brain between these steps. And when he decided that he wants a Russian girlfriend, he's not thinking with his brain. And of course, he's going to get caught. So, why men launder money? They launder money for Russian girlfriends. So, what man wants? They want three things. They want lots of money. Then they want lots of women. And after that, they get bored. So, they join politics to earn respect, to earn fame, etc. So money launderers, when they are in the second stage of their life, when they want, lots of women, then they start laundering money. So this is, and no one knows what woman, wants. They don't know themselves what they want. They don't tell us that what they want, so we don't know, what they want. We know what man wants is very straightforward. So, and men's greatest enemies are two things: the government and the wife, because the government wants to take money. You know, every time you want to have some money, the government says, pay us taxes. So if you want to do tax evasion, you don't want to pay any taxes to the government. So government's going to do lots of bad things towards you when you are not giving them the piece of the action. And every man wants something in the side. The best thing in the side is having a Russian girlfriend, and the wives are not going to let the men have Russian girlfriends. So whenever they have extra money, they do not want the wife to know that they have extra money. So they want to have extra money so that they can afford Russian girlfriend, and they don't want the wife to find out. They also do not want the government to find out whenever you have extra money. You don't want to give the government any, piece of the action that you've been earning on the side. Either you're earning the capital gain through crypto. You don't want the government to find out. So, so this is, man's greatest enemies, and man's best friends is the man's mother, the man's dog, and the man's the Jew lawyer. These three are the most sincere people that you can find, whom you can trust. They're not going to betray you. So the whole game is that when you have enough money and you think that you deserve better things in life, you're gonna then start laundering money so that you can afford a Russian girlfriend and give her expensive things that she deserved. Because she's coming so far away from, Moscow, Russia. She's coming from so far, Romania, Ukraine. So she deserves better, very expensive things, and you have to, give those expensive things to her. So we launder money and then we get caught, of course. So, what sort of financial crime that we can do that earns us lots of money illegally, of course? Insider trading. You can do jihadi scam as well to manipulate people that you're gonna guess receive 72 versions in life and start some stupid wars. Cybercrime, piracy, forgery, extortion, tax evasion, smuggling, robbery, theft, kidnapping, environmental crime, countering of products and currency, fraud, killing someone, corruption, trafficking in stolen goods, illegal arms and ammunition trafficking, drug trafficking, sexual exploitation, human trafficking. and racket trading. So they are called 22 different things that you can do, which makes you rich. And when you get rich, you want lots of women, and the best women in the world are Russian women, Russian girls. So that's why men launder money. So when men do financial crime, they think they've gotten rich enough, they deserve better things in life, better than their fat wife and fat kids. So let's discuss this fraud, the difference between a general fraud and cyber crime. So in a bank, you have multiple departments. These days we call them groups. Like IT department is called IT group, HR, human resource, is called HR group. Uh, Finance department is called finance group. Retail banking is called retail banking group, etc. So within those groups, you have compliance group as well, or compliance department. So compliance department have a policy from the board of directors. The policy is, which is policy means our objective that is given to us. The policy is that we make sure our bank complies with all the applicable laws and regulations, the laws and regulations that are applied to us, all of them, not just AML, all of them. Compliance department responsibility, and who takes this responsibility? The chief compliance officer. And how this responsibility of fulfilling the objective is to be complied with, we do this through something called compliance manual, which is a procedures that we set in order to make sure that the bank comply with all the applicable laws and regulation. So this compliance manual is very general. It's not specific to a specific law. It becomes specific when you have within the group different divisions. So let's suppose in order to comply with the specific anti-money laundering laws and regulation, we have an AML division. So in those AML division, you have AML program. So in the AML program, you have a policy to comply with all the anti-money laundering laws and regulation, and that procedures for those or manuals for those are related to, AML. So within the compliance department, we have fraud division or anti-fraud division. Like AML division, people do CAMS or CFCS certification that are recognized in, even these certification are even recognized in Iran. In Iran, those who have so much issues with America, people do CAM certification to do, to work in compliance department. I've trained two people from Iran. So for the anti-fraud, they have they do certified fraud examiner certification, CFE. Anti-fraud department, AML department, we have a regulatory reporting department. Within the compliance, people do something called CRCM certification. It's called Certified Regulatory Compliance Manager. And you have a QA as well to make sure that all of them are doing things timely without any fraud and error. So within the AML, we have multiple, let's suppose, units. Those units are transaction monitoring to manage the risk of financial crime, money laundering, terrorist financing. You have sanction screening unit to manage the risk of sanction risk. TBML, we have crypto. Investigative unit, you have adverse media unit, negative media. We have a unit for exclusively for counter-terrorist financing. And these days they have started adding the element of periodic review, which is called CDD within the compliance, because the activity of CDD is a cost center. They do not generate any revenue when you are updating the profile of the customer. So those people who update the profile of the customer, they are in some banks added within the compliance department. So let's suppose if you have 100 headcount in AML, majority of them are working in transaction monitoring, sanction, and the rest of them are working in other units. So that's your total, SA headcount. So your banks, those who perform the periodic review, whatever the KYC refresh rate is, this is KYC refresh rate that depend upon the risk profile of the customer. How frequently do we need to contact the customer to check whatever the variable factors about their profile that impacts their inherent risk have been updated, so that we can also update their inherent risk, which may lead to either updating the CRP as well based on how much changes they are in their profile. So your examiner asks most of the questions in the camps for in transaction monitoring, but some of you may be thinking of doing CFCS or ICA. So they ask lots of questions about this. So I'm going to cover all of them. But if you just decide to do the CAMS one, the focus will be mostly on transaction monitoring. Okay, so I want to explain you what's the difference between fraud department and the AML department. So let's suppose there is a guy named Harvey Weinstein, or Weinstein, however you want to pronounce this Jew billionaire. So he woke up today and saw a notification from his banking app, Citibank banking app, that 20-cent transaction was conducted. So a dollar have 100 cent, so it is 0.2 cent, $0.2 transaction was conducted. He don't remember conducting this transaction. Transaction means that fund was transferred. 20-cent funds were transferred. So he calls the bank customer support, and an Indian guy is going to pick up the call. So he explains to the Indian guy, the Jew, he explains to the Indian guy that this transaction is a unauthorized transaction. I didn't perform this transaction. I didn't send anyone money, 20 cent. So the Indian guy checks recent transactions and finds out that there were 5 other similar transactions. They were performed in the last 5 days. So every day there's a transaction of 20 cent being deducted from his banking account and being sent to some other person's banking account. So the Indian guy said that the banking employee says that, so do we need to file complaint for all of them, all 6 of them? You call me for the one that was conducted today, but there have been 5 others similar transactions in 5 other days. So there are total 6 transactions. It is their value $1.2. So 20 cents, 6 transaction is $1.2. So do you want me to file complaint for all of them? The Jew billionaire was already angry. 20 cent is missing. He become he's full on pissed off. So he said, yeah, of course, file the complaint, and I want my money to be reversed back to me because I didn't perform this transaction. So what is this transaction? This transaction was performed by, let's suppose, a guy named Casper Smith. He's a Christian white guy, and he's a hacker. He have gotten hold of yeah, I feel like spelling is wrong. Okay, spelling is right. We're gonna write the C word in caps and the J word in small. So um, he, the hacker, have been stealing. He got hold of credentials of different other customers. Both of them have account in Citibank. So the Jew is a victim, and we all know that Jews like to play a victim card. And the Christian is the culprit. So this guy have gotten hold of 50,000 bank accounts of the Citibank and have been stealing 0.2 cent on all of those 50,000 banking accounts in the last 6 days. So he have stolen $60,000. So fraud department, this is what happens with Harvey Weinstein. This is a banking fraud, banking product fraud. So fraud department of the bank, which is within the compliance department, where the fraud analyst work. So their job is to manage banking fraud risk, and their triggers to start investigation is usually a trigger when a customer files a complaint. Usually, but sometimes banks, of course, contact you as well. Let's suppose there is a very large volume of value of transaction. So bank is going to call you and confirm with you that did you perform this transaction? Do you give us a go ahead? Your call is being recorded. If you give us a go ahead, then we proceed with this transaction. So if this a large value, the bank usually consider this to be suspicious and call you. Otherwise, if someone have performed transaction in your banking account of any value, you have to call the bank and file a complaint for the bank to start their investigation. And their investigation can be on a very small amount, insignificant value of the amount that the investigation performed by the fraud department to find out who stole your money is usually when you file a complaint. So their job is to, help the customer get the money back for an unauthorized transaction. The hacker who have stolen from so many banking accounts of so much money, us, the AML analyst who work in the AML department, our investigation usually is of a significant amount. Why is it significant amount? Because no one is stupid enough to commit financial crime for small amount. If individual amounts are small, but they collectively are very large amount, Casper Smith is not hacking money just to earn 20 cent. 20 cent have zero value. $20 have zero value these days. You can't buy anything in $20, $200, you can't buy anything. So it has to be a significant value of amount. So our job as an AML department, as an AML analyst, to make sure that no one in the bank is abusing the banking account. And what is the abuse? Abuse is when you receive, you send, or when you park illegal funds in your banking account or anyone's banking account, because it can be something like called mule account. We'll discuss this in a third training session next week. So when you're parking money or receiving or sending, if they are illegal funds, we make sure that we're not going to let anyone, you know, abuse it. But it's not about illegal funds actually. So let's suppose there is a guy named Don Draper. He wants, he's a CEO, so he earns, let's say $20 million salary per year. So he's a rich guy. He wants to have his wife killed. So his wife is, let's say, Scarlett Johansson, the Jew. So he wants to pay a hitman to kill the wife. So we have three parties: wife, the hitman, and the person who's going to pay. So his money, the Don Draper's money, is from legal source. He have a job, so this is legal money, legal funds from legal source. This money, when which he have earned from legal source and in his banking account, those are legal money, legal funds. When it is transferred for a financial crime, the crime of paying someone to have your wife killed, when hitman receive the money, that money, although this initial source was from illegal because he have a normal job, the Don Draper, that money becomes illegal funds. So our job is that when someone is sending money, although the money came from legal source, so when you're sending money for some illegal activity, our job is also to make sure that to find out those transactions when they're being sent to someone for, to have them perform illegal activity. So, or someone when they receive money, like in the if Don Draper have a city, so we're gonna find out that when money is being sent, if a hitman have account in Citibank as well, we're gonna make sure that when you're receiving money for illegal activities, so that becomes an illegal money in your hand. You need to find out those things as well. So those things are usually a significant value. No one is going to be killing anyone's wife in 20 cent. They want to receive, let's suppose, $50,000 or something, significant value of amount to, to those, to take the risk of doing those things. But both of these things is two sides of the same coin. The coin is that one, there needs to be a victim and there is need to be a culprit. And of course, there are multiple victims because he have stolen from 50,000 people, Casper Smith. So in our investigation, we are focusing on the culprit who have received, money in his banking account that becomes an illegal money. The money that he have received from 50,000 customers, they may have earned from legal source, but in his banking account, since he have stolen that money, that money becomes an illegal money. So our job in our investigation is to identify those sort of transactions, investigate reasonably those customers, and then report them. Fraud department responsibility in their insignificant value of transactions, investigation, this insignificant value. Their job is to to start the investigation on the complaint of the victim. Normally speaking, they of course can start, they have different other triggers, but normally this is their responsibility. So there is a segregation of duties here. Someone who is investigating banking product fraud, and our responsibility is to investigate for AML purposes or financial crime purposes. But we are both of two different departments are just looking at the same coin, but the two different sides of the coin. So when they perform the investigation, decide to file the report on someone they find out. So when they investigate on the on Harvey Weinstein complaint and find out that the hacker, the Casper Smith, both of them have account, in the same bank. So when they found the culprit and they filed report on the culprit, their reason of filing report on a culprit is different to the reason that we, the compliance department, file complaint on the culprit. They will file report. We're calling the report actually called STR or SAR. They will file it for a different reason of unauthorized transaction performed. And our reason is that you abuse the banking account to receive the illegal money. We're not focused on that how he was able to perform the banking product fraud is the fraud department. Okay, we're back. So I'm trying to make you understand two different type of investigation within the compliance department. So we may report uh, this guy, the same guy, Casper Smith, that is already been reported by the fraud department. We may report the same guy, but our justification of reporting may be a different reason for different risk. But their justification is totally different for, but they're actually, we are just, looking at the two sides of the coin. But if you are in a white people country and working in a white people bank in a white people country, they want you to do the both thing, manage the fraud and the AML risk. So they want you to investigate both of those things because of the overhead cost is so high. In a third world country of black and brown, the labor is cheap. So the banks can have a different person in working in a fraud department and different person working in an AML department. But in a white people country, when labor is expensive, when they hire people, they expect them to be specialist in fraud, which is called certified fraud examiner, and they want you to be the AML specialist as well, so that you can do the both type of investigation. But generally speaking, the investigations, the reasoning are different, the reporting are different. The STR may be filed, uh, today on this one, and our STR may be filed maybe next week or next month on this person, depends on our look back period and however we are able to generate alert on this type of transaction. So it's not the department filing the STR, it's bank files the STR. Citibank files STR on Casper Smith. So Citibank is represented by the both fraud department and AML department. So if the AML department report this customer there, that would be the initial STR or SCR, and this one will be the supplementary STR or continuous activity report, sort of for the one, because they are being filed by two different departments for the same activity that happened by the Casper Smith. Okay, so fraud is two types. One is a general public fraud, the fraud where you convince someone to give you the money, like a pyramid scheme, like a Ponzi scheme, where if you give this guy the money, they can double your money. So you want to get rich quickly, you're going to give person with consent your money, transfer the money from your banking account to this person's banking account, corporate or personal, and they are able to manipulate you that if you give them the money, they can double it for you. So this is general public. The first one is your banking product fraud, where someone perform unauthorized transaction, where they get hold of your credentials and able to access your banking account. Second type of banking product fraud is what the call center frauds are, where you receive a call from a brown person and that person says that I'm calling from the bank. Your banking account will be blocked, will be closed if you don't go to ATM machine and follow the instruction that I'm gonna give you. When you reach the ATM machine, you're gonna call me video call, and I will guide you that how you can recover your money back. So this call center fraud from the brown people are usually, to manipulate the old people who have no idea that the call that they're receiving is officially from the bank or some XYZ type of person is basically calling them. Anyway, so this is authorized transaction. Of course, it's very difficult to get the money back. Uh, you're just being manipulated by some scammer. And unauthorized transaction is when someone perform transaction without your knowledge. You can get this money back if you file complaint on time to the bank. Okay, though this is none of these. The first one are in our uh, course uh, course content for the AML certification. This is in our course content. So when someone convinces you to give them the money, and you are greedy person, you think that you're gonna get rich very quickly, that person will double your money. So general public fraud are two types. Those who convinces you, they convince you through electronic means. Fancy way of saying electronic items. The electronic items that are connected to internet, or electronic items that are not connected to internet. So if someone is able to manipulate you through electronic items that are connected to internet, they're called cybercrime. And that are not connected to internet, there's a one example for that, is called fax machine. No one commits any sort of general public frauds these days through fax machine. They do this through cybercrime. Cybercrime is zillion different ways someone tried to manipulate you into giving them the money, and of course you're gonna lose the money. So uh, let's start with the ransomware. So we're gonna discuss three of them, but that doesn't mean that there are three. There are zillions of them. Okay, ransomware. When a hacker frees your files and folders of your personal laptop in order to recover the access of those files and folder, because you cannot access them anymore. You need to transfer them some Bitcoin, some USD tethers, stable coins, and etc. into their wallet. Then you will get access to your files and folders back. So this is like someone, ransomware is like someone kidnaps your kid and say that give me money if you want your kid back. The same way someone's gonna put a virus in your laptop, you will not be able to access your files and folder unless you give them the money. Second is phishing, where someone is going to send you, uh, someone's going to send you convincing email, convince with an attachment or with a link. Someone's going to send you a convincing text, or they're going to send you a convincing voice note. Uh, all of this comes with some sort of link that you need to collect and then provide your personal information or they comes with an attachment. If you download and open the attachment, puts a virus into your laptop, and they are able to steal your personal information or your corporate information. So phishing is of two types: spear phishing or bulk phishing. Spear phishing means spear spear phishing means that when a hacker targets a particular individual or they target a particular corporate entity, they send emails to every employee of a particular entity, with the hope that someone is stupid enough to download the particular attachment in the email, and then they were able to put a virus in the laptop and able to steal corporate secrets. Bulk phishing is then when convincing email, tags, or whatever are being sent to you, with links or attachment, multiple recipients, when there is nothing common between those recipients. They get hold of email IDs through dark web. Lots of, billions of email IDs are cheaply available to buy on dark web. Of course, you can buy credit card details as well on dark web, debit card details as well. Okay, so phishing, next one is um pig butchering. So no pig is being butchered here. It's just a loser, black or brown person wakes up in the morning and see a text on WhatsApp from a white, uh, blue eyes, blonde woman who says that I like to become your friend. Um, can you share me your debit card details, credit card details, your crypto wallet, private key, your banking account details, username, password, one-time password of your banking account. So the loser, um skinny, fat, brown guy or black guy thinks that this is his lucky day. Finally, someone have realized that how beautiful that black and brown guy is in a third world country, that a white woman have taken interest in him. He's gonna start sharing his personal information, and of course, you know, you're gonna get they're gonna of course steal your personal information. So that's a typical case of honey trapping. And there is no blue eyes blonde woman who's talking to this loser black or brown guy. There is a most probably some, black and brown guy behaving or portraying himself as a white woman, um, try to steal information from the other black and brown person. So cybercrime, which is again zillion different types, those who commit cybercrime, their goal is to come up with some new ways to manipulate you into sharing your personal information so that they can steal your personal information and sell the whoever is willing to buy your personal information, or this steal your financial details so that they can steal your money for that. So they come with different convincing ways. So your examiner is going to be co- asking you questions on people getting rich or thinking that they're going to get rich. Greedy people, they think that they get rich by giving money with their consent, although they are being manipulated, but they consently, uh, fully aware that they're giving money to people's banking account, personal or corporate banking account, and then they lose, of course, the money. And within this general public fraud, there is a specific type of fraud where the electronic means and that are connected to internet being used, and that's specifically called cybercrime. So your examiner is going to differentiate in case study questions, cybercrime question different, general public fraud questions. This is not in our course material, the banking product fraud. Okay, moving on. Next is wildlife trafficking. In order to understand the wildlife, we're gonna have to understand environmental crime. There are three types. The first one is logging. Logging means cutting down trees. White people country, they find it illegal to cut down trees. In a black and brown people, low trust society, they haven't figured out that, cutting down trees lead to carbon emission. So wherever it is illegal to cut down trees is considered to be an environmental crime. Second is when a corporate entities uh, tries to cut corners. So it means that when they are disposing of waste material, they are trying to save money in disposing of their waste material. So, because disposing of your waste material in an ethical way costs lots of money. In order to save money, they dispose of in a cheap way, which leads to carbon contributing towards the carbon emission, CO2 emission, and considered to be an environmental crime. So that's why in a um, senile Joe Biden tenure, there was a ESG thing. ESG means environmental, social, and governance score. Companies were asked that if your company score less, if your company contributes less towards the carbon emission, you will get a higher ESG score. If you get higher ESG score, you get some tax benefits, and you will be you will be part of the um, club where World Economic Forum, and where the your company is promoted, and your company is part of the you know successful for Fortune 500 companies. Your company will continue to flourish. If you're not going to contribute, if you're not going to have ESG compliance, bad things going to happen. So that's why the companies were hiring low IQ, black and brown people in a DI hiring, so that they can get a ESG score. It's no longer relevant anymore. No one cares about CO2 emission anymore. So, but still, disposing of your waste material, which leads to destroying clean drinking water, destroying agricultural land, is considered to be a criminal activity. Um, ESG was a bit, um, let's say, next level thing. ESG means environmental, social, governance scoring. Okay, next, the third one is, that's why we want to discuss environmental crime, is called wildlife trafficking. Wildlife trafficking is where part of the animal body is in demand in a yellow people country, Chinese people. It's a document from Financial Action Task Force, wildlife. So wildlife trafficking have a three-stage process: source, transit, and destination. Animals, part of their body, these animals, part of their body that is in demand. They are of course, in black people country. The demand is in a yellow people country, which is China. Black people countries, the whole region of Africa. And transit is in a brown people country, which is the uh, UAE. The Emiratis and Indians living in Dubai facilitate this transit. So this is explained in this process of wildlife trade. Poachers in Africa, those doctors and engineers don't have a job, so they become poachers. Um, Try to sedate or kill animal whose part of the body is demand. So in case of a rhino, their horn is in demand, or in case of a lion, their skin have a demand. So they find those animals, and have it commingled to be transit to China, commingle with the legal goods and illegal goods. And when they're transit these days to UAE from one of the African countries in a UAE, Dubai port. This is where you're gonna find the Emirati or an Indian who's gonna support you, and then these goods are commingled, repackaged to then send to the Chinese port. So yellow people, the Chinese, they don't like Indians, you know. So this wildlife trafficking moved to wildlife farming. So Chinese people say that we're gonna remove the middleman, and we're gonna go directly to the source, which is to go to Africa. Uh, why Chinese people? Because they like those things. for their medicinal properties. They think that the rhino horn, they're gonna grind it into a powder. It's not. It's not the powder as a cocaine, and it gives them the same effect. Or Viagra medicine give the effect as well. So part of the animal body have some medicinal properties. The wildlife farming is Chinese remove the middlemen, the Emiratis and Indians, and they directly go to the Africa and they bribe the one of the African countries' government to create a resort. Fancy of saying, they create a very big hotel. They make this to be a private property. Very large piece of land becomes a private property. And it's very strategic. This piece of land is in a very strategic location because when animals do the great migration from one place to another place in a particular time of the year, they migrate, and you through a specific route where your private property is going to be, and you will be able to kill some of those animals because you're going to say that they were putting the employees life in jeopardy. They were trying to harm the employees who are working in the resort, so you can get to kill some of those animals. And also when those animals come back in the great migration, particular time of the year, you get to kill them again. So that's called wildlife farming. Chinese people didn't come up with that. French people came up with this thing in the 1960s and 70s. If you watch um, podcasts of National Geographic photographers or photograph those cameramans who used to make documentaries or pictures from National Geographic, they used to talk about in the um, middle of Congo, or any African country in jungle, there were large hotels, uh, empty hotel, no one was there. And only the white people were the owners there, living there, and those white people mainly were from France. So they were doing, wildlife trafficking back then. Chinese people just copy pasted this thing. Okay, next one is human trafficking and human smuggling. Kevin, white woman, 70 years of age, lives in New York City with her house husband, stay-at-home father, who is a 19-year-old husband she have. 70-year-old woman have a 19-year-old house husband who just plays, PS5, and he doesn't have any job, of course. So Karen wants to move uh, to a successful country, a country which have a strong currency, much better infrastructure, much better healthcare, everything better. So she wants to migrate. She doesn't have skills in science, technology, engineering, and medicine because Karen is a cashier at Walmart. But she have very lots of high ambition, to do lots of things with her life. So she goes on Craigslist and finds a trafficker. He said, the trafficker, can you help me move to Uganda? I've shortlisted Uganda to be the best country with very strong economy, infrastructure, lots of job opportunities there. So I want to start my life, move to a best country in the world. So trafficker said that yes, I can help you, through migration. What skills you have? 70-year-old white woman say I have no skills. I'm a cashier. Trafficker said that's perfectly fine as well. Do you have $50,000 cash? I can help you move to Uganda. So Kevin says, of course, I don't have $50,000 cash. If I had, I would not be moving to Uganda to save money and send it to my house husband as a family remittance. So trafficker said, that's perfectly fine as well. If you don't have any money, I can help you move to Uganda. I'm going to put you on a container, on a vessel, and hide you in a container, and you're going to go to Uganda. So Karen said that, why would you do this free of cost? You know, the trafficker said that I'm doing not for free of cost, of course. When you reach Uganda, you're going to do things that I want you to do. You're going to do prostitution, of course. Those Ugandans have never seen a blue eye, blonde woman in their life. So you're going to become a queen bee. Yeah. So queen bee means you're going to become a queen billionaire. Yeah. And of course, that queen billionaire is in a Ugandan currency, which is equivalent to, of course, $2 in America. You're going to be sending $2 to your house husband. She said, that's perfectly fine. I give you my consent. Help me reach Uganda, and whatever you want me to do, I'll do that in Uganda. So that's called trafficking. When you give consent, you want to go to the best country in the world, but don't have the money to go there. You want to go illegally. You have to, do things when you reach there, which is, of course, the best thing she can do with no skill set is to do prostitution. Trafficking, child life traf- child trafficking, different to human trafficking. Human trafficking is, of course, Kevin's going there. Child trafficking is when a Jew wants to molest the child in New York tunnels. So a child from a third world country born in a loser father who have no money. So the father is going to say that I would like to sell my child, or the child traffickers going to kidnap a child from a third world country so that they can satisfy the Jew desires of molesting kids. So molesting the kids. So a child cannot give a consent. Normally speaking, children, the minors don't have their brain cells develop enough to give any sort of consent unless the child is born in a California blue state. They can give consent for transgender surgery. Otherwise, in normal countries, in other states, in every other country in the world, children usually do not have the brain cells to give any sort of consent. In a child life trafficking, the child is not giving any consent, but the child have a you know dream as well. Like the Karen had the dream to go to the best country in the world. Children have a dream as well in order to fulfill the Jew desires. The Jews thinks that children are coming to fulfill their desires of being children want to be molested by the Jew. So the child dream is that although the child cannot give any consent, but the child dream is to go to America, go to New York, and fulfill the Jew desires of being molested by the Jew, the child. So child wants to come to America and meet the Jew, but the child cannot give a consent, and child have no money. Child also cannot give a consent. That's called child trafficking. When you have no money and you want to go to the and meet the best people in the world who have been promised 3,000 years ago that they can molest any child in New York tunnels. So difference between human trafficking right here and child trafficking is you have no money and you want to go to the best place in the world. For Karen, the best place in the world is Uganda. For a child of a third world country is to go to America and meet the Jew. You know. Here one is cannot give a consent, the other one can give a consent. So of course, that's what the Russian girls do when they go to London, New York, Dubai. That's what the Ukrainian Instagram influencers do when they go to Dubai and be pooped on by the fat Emiratis, so that they can the Ukrainian Instagram influencers can make lots of money. And sometime, of course, they get killed as well by those fat Emiratis. So human trafficking, which is different from human smuggling. In this situation, the guy said, "You want to go to Uganda? I'll charge you $50,000." Karen said, "That's fine. I'll give you $50,000. Just help me reach Uganda, and then, of course, forget about me. I'll survive." And how Karen is going to survive? She will be put on a, she's going to apply for fake asylum in Uganda. She will be put by the Ugandans. Asylum. Ugandans are going to put her on a five-star hotel. They're going to give her three-course meals 3 times a day. They're going to give her EBT card, debit card, and put her fast track to nationality. So smuggling is when you have money and you want to go to the best countries in the world. Trafficking is when you don't have the money, and when you go there, you have to do certain things. So your examiner will confuse you with trafficking, because trafficking is also used in a illegal arms trafficking as well, arms and ammunition trafficking. So there are certain words that have different meaning, like smuggling and trafficking. If you are confused and you think they're both actually the same thing, then you are actually not a subject matter expert. You are a cheap AML specialist, and that's why you will be laughed at during the interview when they ask you these simple questions on a case study and you say stupid things. Anyway, so that's your financial crime, where we commit crime so we can get rich and move to the second stage of getting lots of women. This is when you're born in a normal country, which is most probably in a white people country. But if you're born in a third world country, your first goal in life is not to actually commit financial crime. Your first goal in life is to scam your own people, your own low IQ people, and make so much money from them so that you can move that money to the white people country. And so you're gonna abuse your own country's banks to earn that illegal money, and you're gonna again use the same banks of your country to move the money from weak currency to the strong currency in white people countries banks, in a white people country currency and banking industry. Then of course your last aim in life is to get a passport. There is another life in life as well. You're gonna create a community, create a third world low community in white people country. You're going to ask for the vote and you're going to become a member of parliament. And then you're going to say that white people, let me explain you why your white people, white country is so lame, so bad. And let me explain you how you can make your country so better than, that it currently is. I came from such a, you know, best country in the world, developed country, advanced economy of of the world, and let me explain you white people how can you improve your country. So that's what the black and brown people do when they go to the white people and then say the white people, let me explain you how you can make your country much better, like the same way that my country is better, the third world country. So simple, topic of financial crime is going to get complicated because about to discuss what is suspicious activity, suspicious transactions are. But before we start discussing, I'm going to stop for a few seconds, open the chat, take questions on what we discussed so far. Then we discuss suspicious activity. Chat is open. Post your questions if you have any quickly. Mainly questions based on the experience I usually ask on fraud or AML risk. That's why I'm showing you this. But if you have questions on these as well, that's perfectly fine. Okay, no question. Perfect. Moving on. So your job as a specialist in AML is to see something and say something. You're supposed to see suspicious, irregular, and unusual. What? Activity. An activity is either a behavior or a transaction. Let's discuss transaction first. Transaction is a debit or credit transaction, which is you either sending, receiving, or parking money. Parking for a short period, of course, for a period of time. So if those transactions are related to financial crime, money laundering, terrorist financing, and proliferation financing, they consider to be suspicious and they need to be reported. Okay, next one is behavior. Behavior is a bit subjective. So yeah, behavior is example is, let's suppose you call your bank customer support and you say that I would like to fund jihad. Please guide. So that's a very stupid question to ask. No one's going to help you funding jihad or or helping do jihadi scam. So bank, when they receive questions like this, stupid questions like this, and especially if you already have an account in the bank, then makes the banks a bit suspicious. They will report you to the compliance department, who will investigate your recent activities to see that if you have already tried funding jihad or not. So behavior is asking stupid questions. First example. Second example of stupid or suspicious behavior is when as a prospective customer during the account opening phase, you provided fake document or you gave the bank misinformation intentionally. So of course your request will be rejected of account opening, but whatever the information the bank have collected about you, they will use this to forward to the compliance department, who will use this information to report you. So this is called reporting. When you see something, you say something. Suspicious activity, report. So SAR, that's what they call in a white people country, and in a black, brown, low IQ people country, they call it STR, suspicious transaction report. Transaction is of course related to debit and credit, but SAR, suspicious activity report. Activity includes both the behavior and the transaction. So the right way to say it, SAR, this is what your examiner is going to be calling as well, SAR. But mainly of you are from black and brown people country where they call it STR. So I'm going to interchangeably use SAR and STR. In UAE, Dubai, they differentiate between SAR and STR. One is for difference, one is for adverse media reporting, and the other one is for financial. We're going to discuss this in the fourth training session, the difference between these two. So your goal is to see something and say something. Like the same way, the goal of uh, the goal of the doctor is to see something and say something. In order to understand this, let's differentiate between the red flag and a typology. So multiple red flags, single typology. Let's suppose you go to a general physician, doctor, and you pay $50 consultation fee to the doctor, okay, whatever the spelling of physician is. You go to the doctor and pay the fee. The doctor is going to ask, what's your issue? The patient, what's your issue? The patient said, doctor, I have pain everywhere. Doctor's gonna say that's very stupid response. You cannot have pain everywhere unless your girlfriend left you recently. You may have pain everywhere. Otherwise, normal people, you don't have pain everywhere. You're wasting your $50. I'm just gonna spend 5 minutes on you. If you do not explain me what your exact issues are, I'm going to see a next doctor, next patient. So doctor said, give me something specific. So the patient said, okay, doctor, I have a headache. I have diarrhea. I have I have lost my appetite. I can't sleep properly. So by being specific, you are helping the doctor diagnose a particular disease, and then the doctor can you know then prescribe you medicine as well. Disease. The same way, the AML specialist responsibility is to look for particular red flags so we can form a suspicion. Doctor diagnosing a disease is what we call in AML forming a suspicion. We form suspicion based on different red flags. The red flags are behavior, different type of behaviors, and slash or different type of transactions. If those behaviors or transactions are conducted in a certain way, they give us a hint that they are belonging to a particular typology related to financial crime. So financial crime have multiple typologies. What are the typologies of the financial crime? These are the 22 different type of financial crimes. Money laundering have multiple types. Whereas financing have multiple types. Corruption financing have multiple types. Those types are called typologies, also called modus operandi, also called indicators, also called characterization. We preferably call them typology. So a typology means particular type of these four things. Each of those things have their own red flag. Like the same way, a particular disease, like suppose when you get a brain cancer, so it will have a particular symptoms. So a red flag is symptoms, and they represent a particular disease. Sometimes they are uh, very common symptoms that is very difficult for the bank for the doctor to find. So let's suppose you say to doctor, doctor, I have a headache and I have a fever. So that's very general, you can have an headache and a fever for different type of diseases. Um, and you also say, the doctor, I can't sleep as well. So you cannot sleep for different reasons, for different type of disease. So unless you get very specific, uh, it will be very difficult for the doctor to diagnose. Will Doctor will then say that, I have to do further investigation because you're not saying specific things. I need to find out specifically. So we're gonna do complete blood count test, or we're gonna do some, urine test or XYZ different types test to find out exactly what your issue is. Then I'm gonna diagnose a particular disease. So this further investigation in our case is actually called RFI, request for information, and using external information through open source intelligence tool as well to collect the data and then form our suspicion. Anyway, so you need to know typologies like a doctor who charges lots of money as a consultation fee. Your you as a AML specialist, if you want to earn a high salary, you need to first of all, bare minimum, you need to know every typologies red flags. So first you need to know every type of typology, like a doctor knows every type of disease. And when you know disease, you need to know their respective symptoms so that when you see something, you are able to say something at the right time. If you can't do that, no one is going to hire you in this job market. When too many people have this skill set in AML, the interviewers will find someone else who can do this job if you can't do the job. If they find out during the interview you can't do the job because you don't know all the typologies. So the best thing for you is typology, jurisdiction centric. Like there are certain disease that you can only find in certain countries, like white fever. White fever is only in African countries, like polio. It's only in Afghanistan and Pakistan. So certain things are in certain countries. Another example is the jihadi scam. You're not gonna find them in Finland or in Greenland or in Iceland because jihadis they don't like to go to cold climate. They avoid cold climate countries with the cold climate. You're gonna find the jihadi scam in Pakistan, in Afghanistan, in Yemen, Iran, Syria, Lebanon, etc. So that's a warm climate. Afghanistan may not be that warm, but got the point. The countries are just too cold for the jihadis to do their jihadi scam. So there is no jihadi scam here, and there is lots of jihadi scam here. So every country have their own jurisdiction-based typologies. You can find those typologies because you're going to be applying for jobs in your own home country. No one is getting any job on a work visa these days by doing some certification. So you can find those typologies in your country's FIU website. You can find them in your country's central bank website, regulators website, if they have issued them, or you can find them in a financial action task force mutual evaluation report of your country and financial action task force website. So read the executive summary of your mutual evaluation report or financial action task force, or try to go through the websites, uh, one website of your FIU or your central bank to find out what's your jurisdiction base. If you can't find anywhere in any of those, then your last option is to read as much as possible financial crime news on internet about your country to understand what type of news are being reported, and also most probably your country have these sort of typologies. If you go to the interview without knowing all the diseases and the respective symptoms, again, you are cheap AML specialist. So if you don't have the brain cells to find websites like this, because you are very busy person, you don't have a job, but you're also very busy. So I'll be sharing this 2-page document, what main typologies banks are usually exposed to for you to start memorizing. Okay, so we see something and say something. So we see something that is something suspicious related to financial crime, money laundering, terrorist financing. This suspicious. When you see suspicious activities, we report them. But reporting is not going to help you earn lots of money these days also, unfortunately. So if you're thinking of looking for black and white, it's very easy to find. Let's suppose this is black and this is white. Black is that, let's suppose, when a customer is not a money launderer. You thought, but customer is not, and customer is a money launderer. When you thought customer is not a money launderer, it's not a money launderer because you initially thought the customer was a money launderer. It's called false positive. False positive is 3 steps. First is something you initially thought to be suspicious, comma, you perform reasonable investigation. This is the fourth training session, how to perform reasonable session. And lastly, you didn't find, uh, this is you performed. You didn't find it to be suspicious. Important thing, it's not something that you thought to be suspicious and you didn't find it suspicious. The important thing in a false positive is that you perform reasonable investigation. Okay, this is when you think a customer is a money launderer, so you know the particular typology, or there can be multiple typologies as well on a single case, and their respective red flags. You have identified them, you know the narrative, you have drafted it, and you have formed the suspicion using your supporting documents. So you're going to file the STR in this particular case. So that's it. This is your black and white. There is no money again. In identifying black and white, you're not getting any high salary. It's going to be minimum wage sort of a salary. Money is identifying gray areas. So let's suppose this is your someone who is a straight person, and there's someone who's gay. So gray area is when someone is closet gay. So this closet gay is the cases that you want to find out because they are all false negative. False negative is of two types. First is when your bank is unable to identify suspicious activity using any type of tool that they have, whatever the ways you could, but you are still unable to identify suspicious activities of particular customer. Or you were able to identify, but unable to form a suspicion. Why you were unable to form a suspicion? Because it's closet gay. Closet gay are those people who's going to outsmart you. Who are you? You are the simpleton wife who's being outsmarted by the husband. Husband who is a closet gay. Analogy is this: your husband says that I need to go out of the country to attend business meetings. So he frequently go out attending business meeting abroad. So he goes to New York, goes to London, Melbourne, goes to let's say Kuala Lumpur, whatever the spelling is, Singapore. He goes to Hong Kong. So he is attending meetings there, business meetings. He have pictures, he have videos of attending meetings with the clients. He have documents as well that were signed during the meetings. He also likes to go to Bangkok, Pattaya, Bali, Cebu, Manila. So why he's going there? He's going for lady boys. There is no business meetings there. He doesn't have any picture of attending the meeting. No videos with the clients, no documents that you sign. So his job is to remain silent on these visits that he have made. He's gonna brag, do lots of bragging. He want the wife to ask questions about this one because he have lots of documents for that. She wants a proof. She want a purpose. She wants anything. He doesn't want to her wife to talk about this one because he's gonna be silent about all the visits that he makes, frequent visits that he makes. So that's what your money launderers also do. They want your bank to focus on transactions that they are performing on legal funds. They have documents for that. But when they commingle those, commingling means that they perform mixture of transactions that are with illegal funds and legal funds. Want you, they want to remain silent. They hope that your bank is not going to be asking questions about this. and hope that the bank will be asking questions about this, because this way they will be able to provide the bank all the documents the bank needs. So that's what your closet gay customers are. If you are easily like a simpleton wife, if you are easily manipulated because you ask the wrong question, because if she's asking wrong questions because she's focusing on the ones then he wants her to focus on. She's only asking questions that which hotel you stay, whom you met, what you had for lunch or dinner. So because he have so much documents for that. For the ones that he doesn't have, he's not going to be talking about those visits. He hope that the wife is not going to be asking questions about. So that's why it's called false negative. So closet gate, those cases which you are unable to your bank is unable to identify or unable to form suspicion. If you help lower this false negative, you can earn really good salary. So how you learn those things? You learn those by building skills on GADAR. GADAR means, radar for the to identify gaze. For that, you need to do three things. The first is you need to have market knowledge. You need to have skilled eyes, and you are able to form suspicion using advanced level of big data analytics. Market knowledge means that you have done your homework on the market. The homework is when you know certain customers to certain people do certain things in a certain way. So certain people doing certain things in certain way. What they're famous for. So certain people mean certain customers doing certain things belonging to a particular typology. Certain way means that they are doing in a particular using particular red flags. So if you have done your homework properly, you can identify customers like this easily and able to form suspicion. It's the same way, like suppose your wife is not a simpleton anymore. She took the red pill and she starts seeing things that she was not able to see before. She starts seeing pattern, how her husband behave in a certain way. The pattern of the husband having more makeup products than her, husband doing more Botox on his face than her, having more plastic surgery than her, the husband never have bad hair day that normal people usually have. So those sort of things that she have to see. If she's not seeing, then she's a simpleton. So market knowledge is where to find them, and when you find them, what they look like. You can only learn this market knowledge and skill eye. Skill eye is important because risk-based approach. I explain you in future, but when you have multiple cases to review every day, you need to have really good skillful eyes when you are reviewing their thousands of transactions, so many counterparties as well and their transactions. So when you play with the large data, you have done your homework, you are able to see when you find them. This helps you form a suspicion on customers that your previous case investigation by other analysts were not able to do so. So during the interview, if you are able to show some signs that you have these skills, increase your chances of getting hired. Otherwise, if you just betting your luck that I can identify cases and file STR on straightforward cases, or perform reasonable investigation on false positive cases, that's a you know low skill thing, which not gonna help you get any sort of job these days. Any Tom, Dick, and Harry can do those sort of jobs. Why? Because our customer, uh, our boyfriend, have and had lots of girlfriends. Currently have, in the past also had. So the boyfriend had a girlfriend, starting with Bank of America, then girlfriend Chase Bank, So HSBC, currently Citibank, PNP, Paribas, Capital One Bank, um, Lloyd Bank, and Wells Fargo. I don't know the spelling of Fargo. Okay, Mashreq Bank, and let's say um, HDFC Indian Bank. So we, the compliance department of Citibank, only know the previous girlfriend, where the money came from, and we also know the immediate subsequent girlfriend, where the money moved from our bank to this one. We don't know the previous ones. We also don't know the future ones as well. So we are making decision on the customer uh, or on the boyfriend, the limited uh, relationship, limited number of years of relationship that we have. Let's suppose you've had a 7 years relationship, banking relationship with the customer. So you, as a AML analyst working in compliance department, you don't know the whole life story, the whole life story of the customer. If you don't know the whole story, you can make mistakes. When you can make a mistake, that's why you are given safe harbor immunity. I'll explain you this in a bit. So when your customer have so many banks in the past and future, like the boyfriend had so many girlfriend in the past and the future, you can't follow the money. Uh, so law enforcement agency can follow the money, find the money trail, and punish the person by gathering evidence, sharing with the prosecutor who's going to file a lawsuit, and get the judge issue a verdict to punish this person. Their job is the real job because they know and can see the whole picture, where who was the first girlfriend and who is the current girlfriend, and all the girlfriends that your customer had in between. We don't even know the names of the girlfriends and what he did. You can forget about what he did with those girlfriends. You don't even know the names of these past and future girlfriend. You only know the immediate previous and the subsequent one. So this makes our job very difficult. That since we are you in your investigation, you're living in isolation. You're not allowed to collect information from open source intelligence as well. Or if you're allowed, you're only allowed in a very limited scale. Where you have to do this in an ethical way as well. So makes our job a bit difficult to form a suspicion on the customer to have your STRs accepted. So that's why we are given safe harbor immunity. Yeah. Let's discuss this immunity through hierarchy. Responsibilities and designation. Starts with board of directors, hierarchy. This is where your CEO of the bank as well, part of the board of directorship. And you have your senior executive vice president, senior vice president, assistant vice president, and associate levels. If your bank have anything like functional vice president or whatever, no one cares. This is what your examiner thinks is the hierarchy, so I'm explaining you as per your examiner's understanding. The board of directors have a designation of audit committee, risk committee, and financial crime committee. We'll discuss financial crime, and audit committee in future training sessions. And also we'll discuss executive directors and non-executive directors, NEDs, in future. The board of directors have a responsibility of governance. Governance start with, like we discussed yesterday, issuing policy, creating culture of compliance, and be ultimately responsible for AML. So what is this culture of compliance means? Let's suppose your board of directors are like your parents. If your parents are going to emphasize the kids should get higher education, so your elder sibling will get higher education, master's degree, PhD degrees. Middle ones will also do the same thing, and the younger ones will also do, because the tone from the top was that every kid needs to get higher education in the family. So that's the same thing, culture of compliance. So culture of compliance means that when board of directors say that everyone will make sure that the bank comply with all the applicable laws and regulations. So your bank needs to comply, with all the laws and regulations. So by creating culture of compliance. So if you're not going to comply, it's going to be punishment, policy violation punishment within the bank as per the HR policy. So tone from the top to create a culture of compliance. But they do not, the board of directors, they do not implement. Implementation of the culture comes from the senior management. It's like senior management is like your elder siblings. So when elder siblings do masters and PhD degrees, they set the culture in the family for everyone to, follow. They are the ones who set the example. So your senior executive and executive vice president are usually considered to be a senior management. And senior management within the compliance department is called Chief Compliance Officer, CCO, the person who's going to lead the compliance department. And within the compliance department, you have AML department. The person who's going to lead the AML department is called Money Laundering Reporting Officer, MLRO. In banks, usually banks, this is the same person. The person who have the role of Chief Compliance Officer also have the role of Money Laundering Reporting Officer. So that person will either be executive vice president or senior executive vice president. So compliance one is called chief compliance officer, but other departments like risk officer, risk department have a chief risk officer, CRO. Audit department have chief internal auditor, or CIA. Marketing department have someone called chief marketing officer, CMO. IT department have someone called chief technological officer, CTO. So every department have a person leading them. The leading role needs to be approved by central bank. So board of director finalize the person for a particular position, but the final approval comes from the central bank. Central bank checks that this person is just and fit. I explained that yesterday as well. Just and fit means you have the right experience, the right profile, and the right certificate to become a senior management for a particular department. So they are the ones who implement the culture because they're part of the day-to-day operations, the senior management. Um, Board of directors are filthy rich people, generally speaking, especially the executive directors. They do not come to work. They appoint these people, the board of directors, they appoint their puppets to do some of their job, the board of directors' job, the puppets. These senior managements are puppets or mouthpiece of board of directors. So whatever is coming out of the senior management mouth are the words of the board of directors. So the board of directors say that this is what we're going to do, and they have it done from the senior management of different departments. So senior management are the one who are part of the day-to-day operation, and senior management is also the ones who draft the policy. In your bank, you have two documents: policy document and procedure document. Policy document is drafted by senior management, approved by the board of directors. Procedural document is drafted by the senior management, approved by the senior management, signed by the CEO of the bank. So the need to issue a particular policy for your department, a new policy for your department, the need for that comes from the senior management. That if we need a new policy or not. Board of directors, you assume that you should assume that they are filthy rich people. So they're not up to date with the recent regulatory changes or recent risk. So they expect the subject matter expert to guide them how to run the bank. And when they are guided by them through policy, board of directors, approve those policy, whatever the, however the policy is approved is as exactly approved the way it was drafted actually, or if there were made any changes. Um, the policy is usually called objective. So object, in order to achieve those objective, they will have the senior management, you know, create procedures for the employees to follow to have those, objective be achieved. Senior management is responsible in case of AML, uh, approve the high-risk customers' banking account. The final approval of any customers whose risk profile is high should be coming from the senior management of the compliance department. Senior management is also responsible for approval of procedures. So from AVP to SVB, it's called management. But one of these two will be your alternate compliance officer, called ACO, also called deputy MLRO. So if this person is a manager, this one is a assistant manager. Right. These two, AVP and associates. So they are your AML or BSA analyst. They are your pawns actually. Okay. What is BSA means? So you're doing American certification, there's Bank Secrecy Act. In the exam, and you see BSA or BSA analyst or AML analyst, that's you can assume that there's the junior position in compliance department. But you see, when you see BSA or AML officer, you can assume that there's a senior position. There's a chief compliance officer or MLRO position as an AML or BSA officer. The position, the role that you have is that defines your responsibility, and then the decision making questions you have to make decision based on your responsibility. Okay. So alternate compliance officer is responsible for approval of STR or SAR. Final approval is from the chief compliance officer, but the going through the laborious process of approving the STR is usually from the alternate compliance officer. We'll discuss this today. So this person will either be this or this. Well, next responsibility is liaison with the law enforcement agency of the alternate compliance officer. PCA or AML analyst responsibility is to investigate reasonably the customer for their suspicious activities, draft and report the customer as well. Okay, so your examiner likes to say the word filing um, the SAR or STR, or they like to say the word recommending the SAR or STR, or escalating the STR or SR. What they don't say, which is usually said in a low IQ black and brown people country, that's called raising the STR. So kindly do not use this phrase in the live training that you paid money for in front of me. I'll make sure that if you're gonna use this phrase, I'll make sure that I insult you in front of other 30 people who have joined live if you say this stupid thing. So no, we do not raise reports anywhere. This is what your examiners say. Until you pass your exam, you're gonna use these three, one of these three. When you pass your exam, you're gonna go back to using whatever the ways they use in your effed up country and effed up bank that you work in. Your examiner don't care what the terminologies they use in your effed up country and effed up banks. You're going to need to adjust yourself based on your examiner's terminologies so that you find the exam easy and pass the exam. But if you're going to resist, you want examiner to adjust as per your effed up country, you become an egoistic person, you're going to fail the exam, and this leads to me making more money from you because I'm going to ask you to pay me again to join new batches in future, or you're going to pay someone and to help you again. So easy way is kindly forget about what they say in your compliance department, whatever the bank you work in. Okay, so example of a pawn in a game of chess is there are too many pawns. I just want to say. So there are too many pawns. This is us, like this, who are involved in a very high risk job. So those who are hiding behind us, the castle, the horse, bishop, king, and queen, they are the ones. The management, senior management, and the board of directors, they are hiding behind us. So when something bad happens, they give pawn as a blood sacrifice, usually. What bad things happen? Usually the AML failure or multiple AML failures. So they take something called remedial action. Remedial action means damage control. And one of the ways to for them to do a remedial action of unable to form a suspicion on certain cases is they give us as a blood sacrifice, which is that they fire us from our job. So that's why we are too many of them and they don't care. Some of us lose our job and our career. So you have to be very cautious during the investigative phase, detection, investigation, and reporting phase that what you say and which cases you're reporting. If you make a mistake, you can lose your job and they don't care if you lose your job or not. Who are they? The ones hiding behind us. They hiding behind us because they think they are the ones important. And of course, if you play your cards right, you starting from here, very junior position, and if you reach here, you can, become suddenly very important as well. Reach this position if you play your cards right. So we discussed some of the responsibility. I'll explain you more in future when I add further more responsibilities. So let's say your bank have a guy named Don John, different guy. You have four accounts in your bank for quite some time. He open, this is account opening here. First account in 1999, last account in last year. This is 2005, 2015. Status, uh, one the oldest and the newest is active, one is closed, and the other one is dormant. Dormant means that the account that have not been used for more than 12 months. So since we have account, one of the account that is closed, so we need to have account closing here. Let's say this account closing here is 2018. So this guy is closet K. He's been outsmarting your bank last 26 years. Your bank was unable to either find whatever the suspicious activities he's been doing, or if you were able to find, he was easily able to manipulate you because you only ask questions about particular transaction that he wanted you to ask questions on, because he creates so much noise in his bank statement on those transactions. You, as a simpleton wife, were only asking question of his the husband visits of those. This way he was able to manipulate you easily, unless you hire someone with gaydar. Let's suppose you hire someone named Priyanka with gaydar on a very expensive salary. She was able to convince you, your bank, during the interview that she have gaydar. So her job is not to, we're not paying her money to find black and white cases. Her job is exclusively to find cases of a gray area where certain customers are outsmarting your bank. So she's going to review, and she has seen cases like this, because she have gaydar, so she knows how the closet gay people behave, uh, how they outsmart their wives, their kids, their parents. No one knows that they are closet gay. So her job is to review those cases and help the bank find suspicion, supporting documents, particular typologies, and report those customers, which of course you will also end up closing all of their accounts as well, in addition to reporting those customers. So how she's going to do this? Let's say, um, I need some space here. So how she's going to do this? Three measures of detection, prevention, and correction. DPC. What we're discussing? We're discussing risk management related to financial crime, money laundering, terrorist financing, and proliferation financing. It's a 5 steps process which leads to some decision making. Decision making of 4 types. The last one is the correction one. So it starts with the detection, where you are able to identify promptly customers' suspicious activities using transaction monitoring tool with alert generation process. The alerts that are rule-based detection, and those rules are fine-tuned. Uh, there's a threshold management on those tools. They are heavily customized so that your bank have set a risk tolerance level. To do all of this in a way, you can meet regulatory expectation. So whatever I just wrote, the whole fifth training session is about that. How transaction monitoring tool work, what are their different types of tools are, and how they work. So when you identify suspicious transaction, generate alerts on them or cases on them. So you review them based on your procedural framework, the deadline, the framework that is available to you for every alert that you need to take on it under your ownership based on the regions that are assigned to you, the branches, the products that are assigned to you. So you investigate that, those cases, alerts identified by the transaction monitoring tool. You investigate them using internal data where the customer have given you the consent, and sometime, not in every case, but in some case, external data where the customer have not given you the consent, the data that you collect from open source intelligence. So the fourth training session will explain you this walkthrough. So after this investigation, you draft the report, and there's a issue in this as well. Is called unusual activity report issue. I'll explain you in the 14th training session. So when you draft the report, draft it manually or electronically. If you draft it electronically, it's called soup tech, supervisory technology. And your transaction monitoring tool are called RegTech, regulatory technology. I'll explain this today in few minutes. So when you draft the report, however you draft it, we'll discuss this STR filing or SCR filing today. So you have it discussed with your boss who is going to approve the report. The report approved by the alternate compliance officer who is going to finalize the narrative. We'll discuss this today, the narrative and the supporting documents. And file the report. Either the report is filed by the same AML analyst who perform investigation and drafting, or there will be a specific team who do this reporting. So this team is usually called FIU, reporting team, or FIU, investigative team. So, or the same AML analyst. We're going to discuss one of those way to report is through goAML, supervisory technology. Okay, so your decision making in these 5 process are first, false positive. What you initially thought to be suspicious, you performed. The most important thing in false positive is that you performed reasonable investigation. And the word reasonable is very subjective. That what is reasonable in what context, the efforts that you made, the due diligence that you performed in a particular context was satisfactory or not satisfactory as per the QA team, internal audit, regulatory team, all of them found it to be satisfactory. That's very important. Otherwise, it leads to lots of issues in future. So that's your outcome 1. Outcome 2 is actually not an outcome. It's called close monitoring. Okay. Let's suppose the wife takes the red pill. Finally, she's not a simpleton anymore. She starts seeing things that she was not able to see before. Husband behaving in a certain way, husband not talking about certain business meetings and so on. So this leads her to start asking some questions. So of course, the husband is not going to be revealing why he's going to, uh, Philippine. Okay, there's a break. Come back at 11:30 p.m. my time. I'm going to open the chat. Make sure that your questions chat is open for questions. of first training session. If any low IQ person is going to ask me question on today's session, I'm going to find it insulting because I have not completed topic yet. Chat is only open for something that we discussed yesterday, 10 minutes Okay, we're back. So, some decision making for the investigation. Close monitoring itself is not a decision making. It's just when you improve your controls and start seeing things that you were not able to see before, like the wife take the red pill and start seeing things that she was not able to see. So she start questioning the husband's frequent visits to Bangkok, Manila, Bali, and so on. So husband is of course not going to reveal the real reason of visiting those. So she's going to start investigating by checking his mobile laptops for any pictures or videos or something. And he's smart, he's not gonna keep them safe. So she's suspicious, but she can't find anything. So what she's gonna do, she's gonna start closely monitoring all the husband's activities for a period of time. Of course, you can't do this every day for the rest of your life. So for a period of time, she's hoping that the husband or the customer will slip up. And that's where she catches him red-handedly. So close monitoring is when you increase CRP of a customer to high. If this risk profile is moderate or low, you increase it internally within the compliance department. You do not do this at the KYC level. You just increase it for a period to make sure that this customer for a period of time, which can be a week, a month, you are closely monitoring to check that if we can catch this person red-handedly for a transaction, future transactions or something. So again, this is not an outcome, but this is something that we do uh, after the investigation when we feel that the customer is just too smart for us and we just need to play a waiting game for customer to slip up. Third one is decision making, where you report the customer when your audit and compliance officer is able to form a suspicion and identify the typology and file the STR, typology, red flags, and so on. So when we file STR on a customer, we'll discuss this in a few minutes, what is STRs actually look like. If you're not doing corrective measures, you have to increase the customer's CRP to high for every customer that you report on STR. But if you decide to close an account when a customer have multiple account, or if the customer have one account or multiple accounts and you decide to close all of them, it's called exiting the relationship. This is what we do when we, in outcome number 4. Um, in outcome 4, we report the customer and close the account as well. Okay, this based on case to case, based on the gravity of the situation, which cases require account closure. If your bosses feels that the effective way of risk mitigation is reporting plus corrective measures as well. Corrective measure means correcting your mistake of opening the customer's account by closing the account. Okay. So what's going to happen with it creates two issues. What's going to happen with the customer's deposit and what justification will we provide to the customer for account closure? So let's start with the deposit. Will we be giving the money back to the customer? No. If you found out the customer is laundering money, or if you found out the customer is a hitman and is taking money to kill people, you're not going to give the money that you have received back to the customer in cash or through money order or pay order. so that this person can move the money to somewhere else. You're not going to be doing that. So you're going to ask the customer that if you want this money back, uh, you need to get a court order from the judge, from a judge. You need to go to the court of law, convince a judge that this money came from legitimate source. You provide the money trail to the judge, and if the judge gives you a court order, you bring this court order to us, we will release the payment. And if you are unable to do so in a particular period of time, like 3 months or 6 months, bank will transfer the funds to the government, federal government treasury. Okay, justification. We do not provide a specific justification why we close the customer's account. We provide generic justification. And lawsuit, is there any possible lawsuit from the customer for us closing the customer account? No, there will not be any lawsuit because customer sign terms and condition in the account opening form that gives the bank authority to close the customer account without giving a specific reason. And we can update the terms and condition as well when the customer is using banking app. Every time customer logs in, we have the customer sign, updated, whatever the updated terms and condition is. So it's not in our authority in the compliance department to close the customer's account. We are autonomous. The compliance department is autonomous in deciding two things: which customer they want to investigate and which customer they want to report. There should be no board of directors influence in these matters. Board of directors should not be approving STR. Board of directors should not be deciding which customers we should investigate and how we should investigate. There should be zero influence from them. But we don't have the authority to decide which customer's account can be closed. The final approval comes from the first line. So that's why we signed something called service level agreement, SLA, that is signed between first line and the second line. These service level agreements are signed every 12 months. So when we send a request to close a customer's account or all the accounts, first line needs to close it within the time period that is mentioned in the service level agreement. So that period can be on the same day the requests have been sent, or within 24 hours. That account needs to be, closed. And if the account is not closed, customer continue to abuse our bank, first line will be responsible for it. So first line is the one who opened the customer account, and they're also the one maintaining it as well. So they are ones responsible to make sure that they close it when we send them the request to close the account. Okay, since we do not know the whole picture, the whole life story of the customer, we file the STR on good faith without any prejudice, without any grievances, without any biasness against the particular person. So good faith means that we filing it when we feel there is a need to file the STR on a customer because we found the customer to be abusing our bank, and it's not based on any skin color or any particular ethnicity or particular profile of the customer. But we still have the safe harbor immunity available, where we are kept anonymous when we report customer. And so the customer should never find out. But if the customer somehow finds out about it, customer cannot file a lawsuit. That's called tipping off. So customer, first of all, never should find out the customer is being investigated. And customer should never also find out the customer has been reported. So during the investigative phase, after post reporting, in any situation, customer should never find out. If the customer finds out about it, whoever is going to reveal this sort of information to the customer will face serious consequences. Those serious consequences are uh, you're going to lose your job, you will be blacklisted from the banking industry, cannot get a job in compliance department of any other financial institution. They will ask you to pay your salary back. It's called clawback. Salary bonuses that you have received while doing the job. You may face some prison time as well, may face some fines as well. So personal level, lots of bad things can happen if you reveal these sort of serious information, serious uh, things to the customer. Okay, so we have the safe harbor immunity. It means that the customer, first of all, can never find out, but if somehow the customer finds out about us, customer can never files a lawsuit against us. Who are us? We are from here to here, which are AML specialist. AML specialist means you are subject matter expert in AML, which is expected of a very senior position, senior person to very junior level person. Everyone should be doing their job the right way, at the right time. So all of them have safe harbor immunity. Board of directors are not part of this process of detection, prevention, correction, so they don't have the any safe harbor immunity, and there is no possibility of lawsuit against the board of directors by the customer. There may be lawsuit from the law from the prosecutor for board of directors not doing their job, but cannot be any lawsuit from the customer. But that's not actually true. What I just said here, safe harbor, customer cannot. Customer actually can. This is as per the anti-money laundering law. The customer cannot. But customer actually can file a lawsuit against us as per the data protection law. If we unethically collect customers' data from external sources, free or the paid ones, from private sector, third-party vendors. So bad things can happen, We're going to discuss this on 11th. We're going to discuss this on 12th training session. Okay, next one is willful blindness. So bad things happen when you intentionally or unintentionally do not report the customer or a case or particular case that should have been reported unintentionally. So you didn't report the customer. So at one end, you are protected as per anti-money laundering law for reporting someone. And sometime, you know, we don't have the whole customer's life story. So sometime we can make a mistake. That's perfectly fine. If you make a mistake, nothing bad is going to happen if you report someone um, and made a mistake. If you report someone in a good faith and you made a mistake in good faith, that's perfectly fine. But if you do not report someone that should have been reported, it will create lots of issues. Um, Issues like this. Okay, so let's discuss STR filing. In order to understand STR filing, you have to understand the tools that we use. Softwares. The one is called regulatory technology, and other one is called supervisory. It's a bit confusing, so kindly focus what I'm explaining you right now. Regulatory technology is the tools that you are asked to have as per your central bank depends on your bank's budget. So let's say your parents gave you free laptop. So didn't cost you any money. Parents paid for it. But the parents said that you need to download and pay for the antivirus, whatever you can afford. But you need to have one antivirus. We're not going to tell you which company's antivirus, which what's the name of the antivirus software, but you need to have one antivirus software um, in your computer. The same way, regulatory technology is where the central bank has asked your bank to have a particular tool for a particular job. But they will not tell you that which company you need to buy. Depends on your budget. Usually in a third world country, uh, in a low trust society, when retail banks cannot be trusted, so central banks give you list of recognized and accepted software companies and their softwares that your bank needs to choose from. Other if they do not give you a proof list, banks will find the cheapest software, cheapest tool available that they can buy, which may not be able to do the job that you expect a particular software to do. So in that particular situation, this usually happen in a low trust society. In that particular situation, central bank will give you a list that you need to select between, well, among those lists, that which software you need to, based on your budget, you can buy. So something that your bank central bank have recommended and your retail bank will pay for it. Here, central bank, Citibank pays for it. This is where supervisory technology, SupTech, um, is where the regulator will pay for the software and have asked your bank to use it for regulatory reporting. Regulatory reporting is when you regularly report your bank's activities to the central bank or to the FIU. FIU is also called regulatory body because FIU give you regulations on how you can file STR, CTR, VCTR, EFTR. And if you do not follow the regulations, they can penalize you as well. So supervisory technology is where you're not paying any money, but you are asked to use the software to share reports with your central bank or with your FIU. Regulatory technology, the RegTech, is your bank will pay for it, um, but you need to have particular tools to do a particular job. Example of RegTech is a transaction monitoring tool, screening tools, PAP screening, sanction screening, adverse media screening, and core banking system of your bank, KYC tools as well, etc. And supervisory technology is example is goAML that we use to file STR, VCTR. The goAML that is from United Nations Office of Drugs and Crime. They develop this software. Your regulatory authority body pays for it, and banks use it to file STR. Okay, let's discuss STR filing first manually, and then we discuss how the goAML works, which is the easier way. So let's discuss manually, which is much more detailed. We're about to discuss the contents of STR. Okay, the contents of this report, STR, are R here means report. So contents have who did what, when, how, uh, okay, who did what, when, how, and why. 5W and 1H. So this is the contents. That's what we're going to discuss in this form. Um, Forms, the contents of the STR form remain same around the world. It's just a description. It's just a presentation which is different country to country. So what we put in the report is more or less the same, but how we present the report differs country to country. That's what your examiner expect as well. ACAMS, as per the what are the general contents of the STR, that's what we're discussing right now. It's a 4-page document. So this is the page 1 of 4. So this document is not from the ACAM study guide. This document that I found uh, on Google, but it covers all the contents that your examiner expects. So it starts with the date when you are filing the STR. We're going to discuss 4 different type of dates in future: transaction date, alert date, forming the suspicion date, and so on. Okay, so when you report someone for the first time, it's called initial report. If your STR is rejected by the FIU, so you have to correct it and refile it again. Or if you find any issue on the report that you previously submitted, you may file the corrected report. Next one is called supplementary STR. So let's discuss the difference between the two. Uh, if you're reporting Don John for the first time, it's called initial STR. And Don John have no idea that you have reported him. You cannot reveal this information, to the John. So one more thing, if you are interested to know what generic justification we provide when closing the account, I'll be sharing a letter from Chase Bank that someone uploaded on their Twitter account when their personal banking account was closed by Chase Bank. Example in that is debanking. I'll share a document about how generic usually the contents when they close your account. Okay, anyway, so initial STR is when you're reporting someone for the first time. After reporting this person, your bank is asked to monitor the activity of the customer for 90 days. Every time you report customer on STR or SAR, you need to monitor them for 90 days to check if they need to be reported again. And if the customer continue to abuse your bank, the abuse is at the same scale or at the aggravated scale of abusing your bank for money laundering, whatever. So your bank is asked to file a supplementary STR. And when do we need to file supplementary? When do we need to file it? Do we need to file it within those 90 days? No, it's not requirement. You can file it 900 days later as well. You can file it 9 days later as well when you reported for STR. So you file the supplementary STR when you feel that the customer have been abusing at the same or aggravated level. So how many supplementary STR can we file? Depends on supplementary STR policy from your central bank. Let's suppose your central bank says that initial plus 3 supplementary STR maximum that you can file on a particular customer, after which you have to compulsorily exit the relationship. Means that you close all the accounts of the customer. Supplementary STR is called Continuous Activity Report, CAR in America. Got to remember this for your exam. And so initial STR is you want the customer that you report for the first time, and supplementary is, you report the customer afterwards. So who can we report? what sort of customers can we report, or whom can we report STR on? You can report your prospective customer, NTB, um, season customer, and your walk-in customer. If person do not fall into any of those three categories, you're not allowed to report them. So monitoring for 90 days every time. When you file supplementary STR, first supplementary, you're going to monitor the customer again. For any time you report, you monitor the customer again for 90 days to check if the customer needs to be reported again. But that doesn't mean that you need to report it within 90 days. You can report it after 90 days as well, or before 90 days as well. Okay. In the reporting of the customer, one party is a reporting person, the other one is a reported person. That's your bank and that's your customer. So it means that we always investigate, we always report the customer. We do not report account, we do not report transactions. When you report customer, you report the whole customer relationship plus whatever you found the customer to be suspicious. It's not AML department or a compliance department or sanction department or the anti-fraud department reporting customer. No, bank report customers. So AML department, compliance department, and all of those, they're representing the bank. So Citibank reports Don John. John is a reported person and Citibank is the reporting person. So right here, you're mentioning the reporting person's detail, which is your bank's details. Citibank's, business registration code, address, wherever the headquarters are. If the account was open traditionally in a branch, you mentioned that you skip the details of the branch if it was a digital banking account, and you mentioned your primary regulator as well. So it's not just the banks who report. Insurance companies, when they find their clients abusing them for money laundering, they also report. So insurance companies, securities broker dealers, which is brokerage houses of the stock market, and other uh, industries that we're going to discuss in future, the regulators are different. Like our regulator center, our retail bank, Citibank retail bank regulator is our central bank. So um, other industry like casino, insurance companies, brokerage houses, their regulatory body, supervisory body is different. So they mention those bodies details, that who our regulatory body is. Next is reporting officer. Reporting of MLRO means money laundering reporting officer, also called chief compliance officer. This person have the both roles. You mentioned that person's details, and also the person contact for assistance. Also, this person is also called point of contact, POC. So this usually your alternate compliance officer, that the person that was involved in going through the whole case and then deciding if the case requires reporting or not. So let's suppose if the analyst wanted to file STR, but the boss said no, or the boss wanted to, but the chief boss said no. So if the analyst who wanted to file the STR recommended to file STR in an email correspondence, he will be able to show this to the stakeholders, the internal stakeholder, which is your internal auditor and the QA team, or the external stakeholders, which is regulatory audit team, regulator, law enforcement agency, FIU, court of law, judge or jury. So if they challenge you in future, the internal and external challenges for not reporting someone that should have been reported. If analyst wanted to report, he should be able to show the email correspondence with the boss, where the boss decline to approve those STR, so that the boss will be held responsible for not reporting the issue of willful blindness. So written communication is very important in this high risk job. Okay. Point of contact is your alternate compliance officer, usually. Okay, next uh, is the information of the person who found to be apologies, who found to be abusing your bank. We call this person, of course, reported person these days, not a suspect. So you can report customers' personal details, personal accounts, and if that is a corporate entity, you mention their beneficial ownership information. So in our next training session, third training session, we're going to discuss beneficial ownership and how to identify beneficial ownership, how to do KYC of a corporate entity. Okay. So it's easy to file STR on a personal account on an individual because you just need to mention the name, um, father name, husband name, date of birth, nationality, all those information. In this page, um, two things are important. The first one is the customer is still maintaining relationship with your bank or not? Let's discuss this. So there are certain things that you want to do at the right time, right decision. Well, let's do it. Right decision at right time. So ideally, this should be the case in every situation. So when a customer uh, tries to abuse your bank the first time, you are able to catch and report the customer. Right decision, right time, ideally. But you can make a right decision at delayed time as well. It's not uh, ideal, but this is still acceptable. It's considered to be frowned upon by FIU, but still acceptable. This is the situation where the customer tries to abuse your bank, or customer have been abusing your bank for quite some time, and you found out 5 years later, 10 years later, something, but you still make the right decision, which is to report the customer. The third one is not acceptable, which is you making the wrong decision at right or delayed time. So this one is called willful blindness, where you decided to not report customer when the customer should have been reported. Yeah. Let's discuss the second one, where they say that in this document, is the customer is still maintaining the relationship with the bank or not? So let's suppose you find out customer abusing your bank uh, quite some time, a few years later. There's a technicality to that is, let's suppose customer started the banking relationship in 1999 and ended the relationship in 2026. First account, first transaction, last transaction. So customer had four accounts in the bank. First account was open 1999, and since then three other accounts was open, and the last transaction on all of those four accounts was in 2026. Um, so your bank, and it means that this is where the accounts, all the accounts were closed. So your bank have a responsibility of reviewing transactional and non-transactional customers' data to detect suspicious activity, to perform prevention. Prevention means reasonable investigation and reporting. The last one is the cases that require corrective measures. And if when your bank have a banking industry have a record retention period of 10 years, we'll discuss this record retention period on 8th training session. But those people who already know, so your bank is still responsible in those 10 years to still do the DPC. So although the customer may not have no new transactions because the accounts were all closed in 2026, your bank will still, for the next 10 years, still responsible to detect transactions that were conducted between 1999 to 2006, 2026. Your bank is still responsible to detect and report them for the next 10 years, even though all the accounts of the customer have already been closed. So this is what it says. If you respond to this question that the customer is not maintaining relationship with our bank anymore on the day we are reporting the customer, why this can happen? This is the reason that it can happen. Your bank needs to keep the records of the customer for a period of time. Let's suppose that is 10 years. I'll explain this further in 8th training session. So this is where you're going to be reporting the customer after a very long period of time. And is it acceptable to report the customer? Acceptable, but not the ideal situation. Filing STRs on customers who no longer have account with your bank, who no longer have relationship with your bank, is considered to be not an acceptable, not an ideal situation, but considered acceptable if your bank have improved controls, your bank have hired people with GADAR who can lower your bank's false negative by finding cases like this. Okay, next important thing in this page is involved parties. Uh, During the investigation, when we investigate customer, we find counterparties. Counterparties are the parties with whom you have conducted transactions. Let's say Don John have conducted transaction with Walter White. Walter White also have account in Citibank, whether Don John have account. So when we were investigating Don John, we found out that the Walter White is also closet gay. So two closet gays have been doing things together. So if we decide to report Don John, in his Don John's STR, we're gonna name and shame Walter White, because this person who also have an account in our bank. We will file separate STR on Walter White, where we will name and shame Don John for doing XYZ activities with Walter White. This is the situation when both of them have account in our bank. Right. Don Draper have account in Chase Bank. But Don Draper is either sending money or receiving money, which we think is illegal funds for illegal activities with Don John. So in a Don John STR, we will also name and shame Don Draper, but we will not file separate STR because Don Draper is not our customer. And there is no revealing this sort of issue, this sort of information to Chase Bank. Your Citibank should not be contacting Chase Bank and letting them know that our customer is doing bad things with your customer, you should file STR. No, if you're going to do this, there's a high possibility of tipping off. So if it's on Chase Bank to find out on their own whatever the Don Draper is doing in, Chase Bank. Okay, so during the investigation, uh, Walter White was a counterparty to Don John. But during the reporting phase, we consider Walter White to be an involved party, involved as a past tense. So the difference between an counterparty and involved party is counterparty can become an involved party when we have formed suspicion on the customer that we are investigating. We have formed suspicion that this customer is funding jihad, laundering money, our bank. So whomever is laundering money with, that person is also found to be involved with this customer. So the counterparty is with whom you have conducted transaction to receive or send money. And when we have made a decision on you that you have been abusing our bank, those parties with whom you have conducted transaction, they become involved party, and those involved party need to be named and shamed in your STR. But to find separate STRs on those involved parties is a different matter because depends if those have account in our bank or not. So this is where they're asking that mention those details of people who are involved in this customer that you are reporting. So you're gonna mention the naming and shaming. How do we name and shame someone? So it's called travel rule. So when someone send money or receive money through fund transfer or through clearing, we get to know their banking account. So once in a Citibank, we will know the banking account of HSBC, account title and account number when we receive money from HSBC Bank, and also when they send money from Citibank to BNP Paribas, we will also know that what's the account title and account number in BNP Paribas. So we use those account number and account title to name shame someone in the transaction that we reported. So third page is where we report the transaction, the date of the transaction, the amount of the transaction. And if we found multiple transaction because there were multiple typologies in the same case, we pick one transaction against each typology, mention their details, the date, the amount, the value, reference number of the transaction, the description, and so on. Okay, the most important topic of today's training session is the narrative, reason for suspicion. Let's suppose husband said, I want to bring anaconda. And husband didn't put all the required controls. Husband did, husband cut corners. He tried to save some money and did ineffective controls, which led to anaconda eating the baby. And wife is going to file a lawsuit against the husband, divorcing the husband and also manslaughter case. So what is husband is going to do in this situation? Narrative means reason for suspicion. Reason for suspicion. So what the husband is going to do? Husband uh, will try to transfer all the blame on anaconda. Husband is going to say that I'm not going to take any blame of bringing anaconda in the house and having ineffective controls. Wife is going to say no. Husband did this intentionally. He intentionally brought a wild animal when he knew that he doesn't have enough money to have good controls. He had ineffective controls and he still decided to open account of Lola. And when the Lola funded jihad, the bank is saying that I'm not going to take any responsibility of letting Lola funding jihad. Uh, Bank wants to blame everything on Lola. So that doesn't make sense. Bank should take some responsibility. Husband should take some responsibility of opening the door and bringing anaconda in the house. That's what the bank will do as well. Bank will try to transfer all the blame on customer. So unfortunately, that's what we are supposed to do smartly. Your drafting skills, when you draft the STR narrative, are very important. How you explain without showing any weaknesses from your side, without accepting any blame of your wrongdoings of bringing this customer who ended up abusing your bank. This is how you successfully avoid legal risk of opening the account that you should not have opened. So we can do this, from the ones that we are highly anticipating. But what about when the golden retriever and chihuahuas eat your baby, whom you thought that they are practically, especially the golden retriever, you thought that they are practically a harmless dog, and the golden retriever surprise you of abusing your bank. So the STRs that you file on a low risk customer are usually, frowned upon in your bank, by your FIU, frowned upon by your FIU, because someone that you thought to be practically harmless, you found that person to be abusing your bank. That's, something not acceptable. So something that is, frowned upon. Acceptable because you did report the customer hopefully on time, but is considered to be frowned upon. If there are too many cases like this, then it creates issues in your bank. So narrative, how smart you are in convincing the FIU to accept when you're trying to transfer all the blame. There's an art, the drafting skills. It's a reality. So how good you are in able to transfer all of this, it's an art. And how do you develop this art? You develop this when you are a chief compliance officer or a money laundering reporting officer, when you have years of experience of knowing how to convince your FIU. So let's discuss this convincing. You, as an AML analyst who convinces, as we're discussing hierarchy. So your job as an analyst is to convince line manager. Line manager responsibility is to convince the senior manager, whose responsibility is to convince the unit head. Transaction monitoring, let's say, whose responsibility is to convince the alternate compliance officer, whose responsibility to convince the chief compliance officer. Chief compliance responsibility is to convince the FIU. FIU responsibility to convince LEA. LEA responsibility to convince the prosecutor. Prosecutor's responsibility is to convince a judge or a jury in a court of law to punish the person. So not every case ends up right here. Very few, 0.1 of 0.1 or 0.1%. 0.1% of 0.1% of point, let's say 1% of the STRs that we file end up right here. So, but convincing from a chief compliance officer to the FIU, it's an art. It's like a art when you were a 5-year-old baby, a 5-year-old kid, and how you were able to convince your mother to give you ice cream. It's an art. The 5-year-old kid have learned the art of how to cry, how to, emotionally blackmail the mother, so the mother can give the ice cream. What 5-year-old kid knows that what words to use and how much to cry to get the ice cream, because the 5-year-old kid have 5 years of experience dealing with that mother. So the chief compliance officer have years of experience of dealing with the FIU, will know that, how to convince the FIU, what words to say to convince the FIU, so that the FIU can, uh, give you what you want, which is our goal is to have our STRs accepted by the FIU in order to do effective AML. So art, to blame everything on customer, that needs to be, that's an important thing in our job, because we draft the STR draft the narrative, which are finalized by the audit and compliance officer. So you need to learn how to draft it, how to blame someone. And no one can teach you. You just need to learn it, uh, what words to use, and how to blame everything on the customer. So some words that are acceptable in my country, FIU, may not be acceptable. So, every person's mother is different. So what words I use to get the ice cream from my mother may be different to what words you use to get the ice cream from your mother. So it differs FIU to FIU, how you get your STR accepted when you're trying to blame everything on the customer. Okay, next is you mentioned the typology. Red flags. Red flags is the transaction. Typology is the type of red flag, type of money laundering, terrorist financing. Okay. Filing STR to the FIU is a recent concept. The oldest FIU in the world is FinCEN, that was formed in 1990. LEA, which is FBI was formed in 1908, 908, 1908. So before FIU, banks used to report directly to the law enforcement agency. So if you have any customer that you have reported directly to the law enforcement agency and you are reporting STRs this time that to the FIU, you may be asked to mention those details of those STRs and their transactions. Next, you're going to mention the whole customer relationship of this customer with the bank. All the accounts, their statuses of the accounts, their account opening date, their transactions, average monthly transactions, the peak balances on those transactions, all the statistics. Again, the frequent transaction the customers perform, cash, check, fund transfer, clearing, overdraft. If it's a importer, exporter, you mentioned the letter of credit transactions as well. So these transactions, the type of transaction customer usually perform in multiple accounts, they may not be suspicious. These are the usual transactions the customers perform. Okay, supporting documents. When you decide to report, let's suppose Don John, who have multiple accounts in your bank. So what is your supporting documents? Supporting documents needs to complement STR narrative. These two things complement each other. If they're not complementing each other, your STR will get rejected. The goal is to have your STR accepted for effective AML. The supporting documents is usually supporting documents are evidence of money laundering. STR form like this form, it's not an evidence of money laundering. Evidence of money laundering is the support. And what are the supporting documents? Account opening form, bank statement, and any other form or document that you think is necessary that complements your narrative against the customer. So what can be the other document or other form? It can be fake document the customer share with you during the maintenance, not just at the account opening stage. It can also be during the maintenance of the account. Other form can also be email correspondence. If you contact the customer over the email to ask something and you customer responded, which you feel that the customer is manipulating you during the response, you can use this email correspondence, convert into PDF form and attach it with the STR document saying that this is customer laundering money. Okay, when the customer have multiple accounts, which account opening form and which bank statement you're going to be sharing? It depends whom you consider to be the main one. So the main account is the one whom we use as a supporting documents. So let's suppose in this situation, we use the main account to be the oldest account. This is the account that he has been abusing since day one, 1999, when he opened the account for the first time. And every other account will be considered as a linked account. Linked account, or also called allied accounts, these are the ones on whom we do not report we do not share supporting documents. But you can select this, one of these, when you file supplementary STR. You can select these ones to be the main one, and that one will then become a linked account, and the other one will become a main account. So it depends, which one you consider to be the main one to use it as a supporting documents of STR. But they give you sometimes some extra space to say to mention something that you were not able to mention in the previous other space or document. So final approval is from the chief compliance officer, that person who have lots of years of experience, who gives the final approval. But the laborious work is by the alternate compliance officer. All right. This is doing it manually. Let's discuss doing it electronically using goAML. So goAML was introduced by United Nation on Drugs and Crime. They developed this software, and lots of countries use this software to file STR. Like they do this in Indonesia, they do this in UAE as well, Nigeria, New Zealand. This is Nigeria. They use it in Germany as well, Mauritius, Maldives, etc. There's lots of Uganda. They use it, etc. Lots of other countries use it. So I want to show you the Mauritius one by opening the Mauritius FIU's website, by showing you the document from Ireland website. Ireland issue a goAML user guide a few years ago. Okay, there's a difference between a user guide and a schema. A schema is usually a detailed process flow, or also called workflow. User guide is how to use a particular tool. But in a detailed process flow, there can be multiple tools that are connected together, involving in one detailed process where data is being shared and output comes out at the end in a different tool. So schema is when there are multiple tools connected, and user guide is for each tool there is a particular user guide. So we are discussing one tool's guide, which is goAML. This user guide is from Ireland. This is fiuireland.ie. They issued this user guide in 2021. Shows that how banks in Ireland can use goAML to register first and then start filing STRs, CTRs, VCTRs using goAML. So in the first few screenshot, they're showing you how to register as an organization. You can see the same thing. So registration guide and so on. Next, we're going to assume that, let's suppose your bank have registered. Your bank can have multiple accounts given to analysts and then to uh, line managers and chief compliance officers and so on. So when you log in, it's going to show your credentials here. You click new report. It's going to automatically generate reference number for the STR. Automatically will fill in information about your bank. You just need to fill in the information about the customer on whom you are filing STR. Okay. Mention reason for suspicion here. Attach document of the supporting document. Select through drop down option the typologies, which is jurisdiction based typologies in your country. They will show here, and transaction that you can put. So this is attaching documents, which can be PDF file, CSV file, doc file. Okay, we want to discuss important, which is transactions. So transactions you can put in on the face, or you can click edit to mention the details of the transaction. When you mention details of the transaction, this is where you're going to be naming and shaming involved parties. The person you are reporting, that person have found to be doing transaction with others, who also we think are abusing, our bank or other banks by receiving, sending illegal funds for illegal activities. So involved parties. Okay. You can of course, delete the transaction that you before reporting them. Okay, last screenshot is important. It shows quality check. So shows the who created the report, who submitted the report, and when the report was submitted. So your analyst is going to create the report. Your alternate compliance officer will attach all the supporting document and finalize the narrative. But the chief compliance officer will log in from his or her account in goAML and then do the submission, final submission. So goAML is, of course, you can use it to report customers quickly. If your country have a manual way of filling a form and scanning the documents and then emailing your FIU, this takes lots of time actually. You can also connect your goAML with your transaction monitoring tool when you are reviewing particular alerts and want to form a suspicion on those. You can, directly draft STR using the transaction monitoring tool, connect it with the goAML and then report it. That makes things much more easier. Okay, next. When we have safe harbor immunity to report customer, we may abuse it for our key performance index, KPI. Let's discuss two cases for this. Let's suppose we have a brown guy and a white woman named Susan. Uh, okay, if you don't, this is white and this brown. So both of them work in the same Citibank compliance department as an analyst. Both were due promotions in annual appraisal, performance appraisal. So in 2025, he reported 50 STRs. She reported 150. And we're only counting initial STRs, no one counts supplementary. So both were due, but she got the promotion and she became a manager, AML. So this brown guy, low IQ, loser, his ego was hurt. He was asked that you have to report to her now. So his ego was hurt that she was the same analyst working at the same position with him, and now he have to report to her. So what he's going to do in 2026, he will try to find 5,000 STRs. This, so that he will get 100% confirmation in the next appraisal to become a manager as well. So he's low IQ, being brown is inherent to him, is in part of his DNA that he's low IQ. It's not, he cannot even compete. Brown man cannot compete with the white woman, the level of physicality, the level of mentality, none of that. So she will do the quality check. Says right here, analyst needs to convince the manager first before it escalate to the senior manager. So she will do the quality check and make sure that she's not going to let this guy abuse the safe harbor immunity. He's going to say that what the hell is going to happen? If you do file some wrong STRs, wrongly report someone, nothing is going to happen. Let me report customers, 5,000 customers, so that I can also become a manager animal. She's going to say, F you. Brown guy, go back to your country. You third worlder. No, go back to your country. You don't deserve to live in a white people country. Go back, do your shenanigans there. I'm not going to let you file 5,000 STRs on some random people. Yeah. So example of this is called this what he's trying to do is called false positive STR. So example of that is let's suppose Lola, who's supposed to receive one credit amount every month, one salary. Let's suppose she receive 5,000 Emirati dirham from a guy named Ali. So this was suspicious, we were not expecting, as per her KYC, to receive multiple credit transactions every month. So the right course of action should be to contact Lola and finds out why she have received, to find out purpose and relationship. But if you're not going to contact her and you just say that, Lola, you receive two credit transactions, I'm going to now report you on STR. If this brown guy have this sort of attitude, that will be considered false positive STR, which is the STR with weak evidence. So what is the right course of action? Is to contact Lola and ask her, why did you receive? So Lola said that I received this amount from my brother. Ali is my brother who gave me personal loan. I wanted to buy some furniture from IKEA. I have the receipts of the furniture I purchased from this amount. I can show you those receipts. So if the bank contacted her, if the bank have contacted her, she would have provided. If the bank didn't contact and bank wanted to file STR, those STRs are false positive, cheap STRs, by cheap people. And how do we stop these cheap people from abusing this thing so that they can achieve their KPI of reporting so many? Through quality check from your, land manager. So this is the one way to stop abuse of KPI. The next way is, let's suppose you have a black woman named Ola, who's your bank's alternate compliance officer, Citibank. She's been working in your bank for quite some time. Let's say here, STRs and budget. Again, we only count initial STRs. So she's been working in your bank since 2017, 18. Right. So when she joined in 2017, your bank reported 550 STRs, increased to 650, and okay, let's compare with the budget. So it was a 3 million overall AML budget, no? Compliance budget may be different. Let's suppose just AML budget, AML department. Okay, let's say compliance department. Okay, 5 million increase. This increased to 7 million. There's 8 million, 9, 11, 12. You double your budget to, let's say, 25 million and then 40 million. How you're justifying this budget? The customers that you're reporting, let's say, were 1150, 1170. This was lockdown. Let's say 1190. This is when we come back, stop working from home. So this is 500, 1590, 1700. That's 1890. And let's assume that today is the 15th of December 2025. So she have 16 days left. Ola. She have filed only 55 STRs from 1st Jan to 15th of December 2025. She have only approved 55 STRs in those 11 month, 15 days. So she have 16 days left. If the people who are supposed to maintain the quality check, which includes your alternate compliance officer, if they become, lazy, what she's going to say in the next 16 days, she's going to say that it's open season. Any Tom, Dick, and Harry analyst who wants to file STR on any Tom, Dick, and Harry customer, come and I will approve STRs. So what she's going to do, her goal is to achieve the previous year's target and file a bit more number of STRs, increasing from 1890 in 2024 to 1895 in 2025. So that she can convince, the goal that they also have is to convince the board of directors to get a 50 million budget. So Board of directors, they're only going to give you more money next year when you are able to convince them that the money that you're using is to finding customers that are abusing your bank. So board of directors always give you a psychological pressure that you want more money, you have to show us the result that you are able to file STR on customers that are abusing our bank on time, right time, in every situation. So we also need more money because we want to keep our best players by increasing their salary, giving them the promotions, giving them the bonuses. And we also want to, improve our squad. For that, we need to, hire people from other banks, giving them 50%, 30%, 25% raise. So we need more money for that. And also, we need to have best tools available, updated tools available as well, which cost lots of money. So in order to catch up with the Chevy, the Jew lawyer, Tom needs to update the controls. If Tom is stuck in the same situation and Chevy continue to find new ways to abuse your bank, then you're gonna suffer. You won't even know your bank is being abused. So in order to catch up with the Chevy, we need to have more money to improve our controls, and for that we need to also show some numbers as well to the board of directors. So that should not be allowed, this thing. If this is allowed by alternate compliance officer and chief compliance officer, if they start doing something stupid like this, FIU will start rejecting STRs that are filed on a false positive, weak evidence. So in some countries, they issue the FIU issue naming and shaming reports that are publicly available for the board of directors to see. So the board of directors are not easily manipulated by the alternate compliance officer and chief compliance officer when they show them the numbers. Board of directors should be able to review FIU reports as well, that how many STRs were filed and how many of those STRs were rejected. So let's say these are the banks, these are the year they reported STR. You cannot publicly show the number of STRs are bank filed, that's a very confidential, but you can show some stats. FIU can show some stats. So let's suppose in your country, you have these banks, HSBC, Bank of America, Chase Bank, Wells Fargo, you have HDFC, you have Capital One, BNP. Okay. Our 31% STRs were rejected in 2024. HSBC 29, this bank 23%, this bank 19%, this bank 17%, 11%, 7%, 5%. Every bank made improvement next year, except us. It got worse, 37%. So if a senior pupil can't keep a quality check, if they allow compliance department or AML department safe harbor immunity to be abused by trying to file false positive STR, so something needs to happen. And what is going to happen? So we are sheeps. We have a border collie controlling us, border collie who's been trained by the shepherd. So this analogy is that the shepherd, border collie, and the sheeps. So we are the sheeps, the pawns. We have been told or we have been guided by the border collie, the smartest dog in the world, how to get things done from the sheep. The border collie is a assistant of a shepherd. Shepherd who's been hired, Shepherd, the chief compliance officer, who've been hired by the owner of the this ranch or owner of the piece of land to get the job done from the sheeps. So the shepherd brought his border collie to get things done from the sheep. But if the shepherd and the border collie are lazy, so it's easier to replace them than replacing the sheep. So when the board of directors see that they are being manipulated to receive more money, more budget by the board by the chief compliance officer or the audit compliance officer, and they can confirm this in a naming and shaming report from the FIU, they will have the shepherd and the border collie replaced. So to get the sheep to get the work done from the sheep. And you can see that in the practical example in sports clubs, football, bas basketball, and so on. When a team is not performing, you replace the manager or a coach, the same players start performing again. So if your coach or manager is lazy, they're not maintaining quality check, they're not smart enough to get the things done from the sheep, they'll be replaced by the owner of the club, of the team, you know, sports club. So that's the today's training session, the risk management, how we mitigate the risk of the customer by performing 5 steps that leads to some outcomes. And the important ones here is the how do we detect customer suspicious activity and how we perform reasonable investigation to make the right decision. That will be discussed on a fourth and the fifth training session of this training program. I'm going to stop here, open the chat for you to ask question on any topic that was discussed today. If this is something new for you, I'll be sharing recordings plus also the spreadsheet. So kindly write things down, anything that you found to be something new for you. The questions that you're going to receive in the exam, especially decision making question, will be combination of multiple topics. Something that I explain you today and a topic that I'll explain you a month later in a different training session. They're going to combine different topics together and ask you a decision making question. So if you unable to remember every topic of every session that we're going to discuss, you're going to find the exam to be very difficult, which should not be difficult. It just require you to put some efforts. If you're not interested in putting efforts, unfortunately, you're going to lose your $3,000. Chat is open if you have any questions. It's called continuous activity report, CAR. Says right here, continue to abuse. So that's why it's called continuous. Next, supplementary STR. That's the wrong way of drafting the question, confusing with the RFI and the supplementary STR. I haven't explained RFI yet, but so the initial STR that you file it after RFI. You need to give the customer opportunity to give you the purpose and relationship on this transaction. And if you find that the customer is actually manipulating you, you're going to use the customer manipulative reasoning to report STR on a customer. So sometimes we do not report STR directly. We escalate RFI, and based on the response of the customer, the manipulative response of the customer, we use this against the customer to file STR. So when you're trying to blame everything on the customer, this is the really good thing for you when you find out the customer is actually manipulating you and you have a written response from the customer, how the customer tried to manipulate you. So initial STR can be used for after RFI, after escalating RFI, initial STR can be filed, and your supplementary STR can be also be filed after the RFI. You need to give the customer opportunity to provide justification. Sometimes customer can justify you, but when the customer is unable to, you use that response and blame everything on the customer. Next. Again, very basic stuff. This sort of stuff, knowledge don't get you hired. This is a bare minimum sort of a knowledge to build some understanding. Initial few training sessions. So when we discussed something technical from starting from 4th to 14th session, they are the real training sessions. This is all basic stuff. Today, yesterday, and also the tomorrow, the next one. Any question? We're going to discuss RegTech future when we discuss transaction monitoring tool. Can transaction instrument be used for supporting documents? Yes, so the transaction instrument, like a negotiable instrument, when a customer fill a form, let's suppose fill a form to ask for a pay order or a money order, or a customer presented a check to your bank, and you feel that the signature on the check was a signature, was a fake signature, because this is not the person who have an account. If someone else is trying to sign a page, fake signature, or when someone is fill in a form for a pay order or money order, and you find out that the reason for pay order or money order uh, is for illegal activities, to fund illegal activities. You can use those forms, you can use those checks uh, as a reason to file an STR against the customer. So negotiable instruments can also be used. They call negotiable instrument, not transaction instruments. Saying the word negotiable instrument. By ACAMS. Question. So you're going to get two documents. Got to memorize this main typology, 2-page document. Got to read goAML. If you don't have the exposure on goAML, this is the user guide that you have to go through, 19-page user guide. No one cares, ACAMS don't care if they do not use goAML in your country. You need to use it for best practice. goAML is used most of the countries. ACAMS think this is the best supervisory technology for STR filing. So you pick a user guide from one country and go through how the goAML is used in a filing STR. Question. Chat is open. Any further question? Okay, that's fine. So see you next week. Correspondent banking and beneficial ownership. Um, During the weekday, Monday to Friday, I'll be sharing some documents every day in your WhatsApp group. You need to go through them. If you're not interested in going multiple documents, you just want to, again, you know, convince them. If you just want to meet their expectation, you should apply for jobs in ACAMS as well. If you just want to meet their expectation, or apply for job in ICA, or apply for job in ACFCS, because in a real world, in a bank, you're not meeting their expectation regarding AML knowledge. And of course, this is a sarcasm. No, ACAMS do not do any hiring. ACFCS do not do any hiring. If your goal is to just study their study guide and their flashcards and their assessment models, which is just PowerPoint slides, then perfectly fine. Go apply for jobs in ACAMS. after you cheaply pass their exam with 75 marks. No one's gonna hire you in a practical world. So when I share documents Monday to Friday in your group, make sure that you read those documents for your own sake. I don't care in future. I'm here to just make money if you're not interested in helping yourself. We see you next week. We're discussing correspondent banking and KYC of a corporate account plus PAB screening. Have a good day.